right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Happy Friday to you all. Happy Friday, Quiles. Not quicker. Yeshwant, much love to you. Thank you for tuning in from India. Crypto Clan World, good to see you in here as always. Crypto Wander 5813, thank you so much for being here, and thank you for modding for me. And yeah, Samuel S., thank you for being here, and thank you for modding as well. So guys, Bitcoin is rejecting, like I was saying yesterday and throughout the week, looking at that naked monthly point of control at 81,435. I did end up getting into this short pretty much right away at 81.4K. Also, yesterday's scalp long position from the VWAP. Remember, we longed the VWAP during the live stream yesterday. It did play out to taking out the highs. That was a 4.5 risk to reward ratio, and that was a complete win for me. I closed that out completely upon touching the naked monthly point of control. So won the scalp long, entered the scalp short off of that scalp long win, and this trade is up really big for me right now because I was able to get in with such a tight stop loss here that we are seeing that drop. And I talked about how the target for that drop was taking out the lows at 77.6K. So I have taken a TP1 of 50% on this short position here. But let's talk about the bigger drop that we could see here, because we are seeing our buying exhaustion channel starting to break to the downside. After bouncing from our pitchfork midline, you see we came up and we bearishly backtested that channel, and we are currently rejecting. So I actually expect us to make another new local low on Bitcoin. We do have some support coming up relatively quickly here. We have now an SFP, a swing failure pattern of the lows from earlier today right into our 786 Fibonacci, and that 786 Fibonacci is pulled from the lows of the buying exhaustion channel to our current highs of the buying exhaustion channel, coming into that 786, which is also around our pitchfork midline. And then you can see our flat targets. If we're looking at a bigger flat in here, our flat targets between the 1.236 and the 1.382 are in that zone as well. So I am looking for potentially a long. I don't really see the best confirmations, and because we are losing the channel, bearishly backtested that channel immediately, and we're dropping, I am going to be cautious with taking long positions. We know that we were looking for a bigger pullback, and we are going into the weekend where we would expect a bigger pullback. And what is going to be important now is to see whether this move down is going to be a corrective move down, or if it's going to turn into a 5-wave impulsive move down. Because if we do have some sort of impulse here, we could see a larger 3-wave corrective move where we are going to come down towards $74,000. And that would be an area of interest to look for longs for me. But for now, we are looking for a bit of a pullback on Bitcoin. Let me check the chat here, guys. Welcome in, everybody. Hope you guys got into this trade here, but really good risk to reward ratio on this. Already taken a TP1 of 50%. And protected position. Now we are just moving on to our next trade, leaving this open just in case we get that bigger drop. All right, let's see here. Yo, dude, not much. Just trying to wrap up this work week. Okay, not quicker. Welcome in, my man. Hey, man, hope you are good. Much love from Holland. Yeah, Shogun Crypto, thank you, man. I am doing really good, and thank you so much for tuning in from Holland. I hope your week is going well. Quiles, what's up to you, man? Good to see you in here as always. Samuel, yep. All right. That C wave could be a bit be too bit for that flat though. Too big, I think you mean, for that flat though. Well, the targets of a flat are between the 1.236 and the 1.382. So we could actually drop all the way pretty much to 76.1K and still see the C wave be in that zone where you would expect a flat to correct to. Now, we do have some internal liquidity, guys, that is going to be resting right at the 1.236. You can see that 76,650-ish liquidity is going to be resting at that 1.236, and that's also going to be tapping into our 786 Fibonacci, which we did front run earlier today. We front ran it because we were hitting our pitchfork midline, and you can see currently we're finding a little bit of support at our anchored VWAP, and this anchored VWAP is the anchored VWAP from the excuse me, not the anchored VWAP. That is our, let me zoom out here, 8-hour chart. Oh, interesting. Okay, so for some reason, TradingView does that, but no, we're below our anchored VWAP. We are below the anchored VWAP from the all-time high, and we're in process right now of back testing that pitchfork midline that we broke above last week, earlier this week. One thing that I will say also is you can see we're on the 8-hour time frame. We did confirm those 8-hour bear divs with taking out the high at and hitting that naked monthly point of control. We've now confirmed a drive of bear divs, actually a triple drive of bear divs on Market Cipher, and also a triple drive of bear divs on NAMI with the money flow bear divs. So guys, we had all the proper confirmations that trade setup that I look at between Market Cipher B and NAMI that plays out, I would say at least 80% of the time, is when Market Cipher has at least one drive of bear divs, money flow is at least topping out and starting to curve to the downside. And with NAMI, I like to see multiple drives of bear div and the money flow bear div. And when I see this trading setup, it really does give me that confidence to enter a short position. Always, even if it doesn't play out, I will always take a short position if I see this setup on the charts. And once again, we were looking for the liquidity grab of Monday's highs into that naked monthly point of control. And that within this purple box of resistance, I let you guys know this at the beginning of the week, but within this purple box of resistance, the main level of the main kind of sniper level I was looking for that bigger pullback from was that naked monthly point of control, which is a volume level of resistance. Because this purple box of resistance, it is 2 daily levels that we had on the charts. We hit the first daily level on Monday and saw a little bit of a pullback from that daily level. But the nicest actual sniper level of resistance here was that naked monthly point of control. Now, we have broken market structure bearishly on the intermediate and lower time frames by taking out that low at $77,600. We now have an official bearish market structure break on Bitcoin, which is the first time we've had a bearish market structure break since the entire impulse happened. 1, 2, 3, 4, 5. So we could get that 5-wave move. Now we're seeing an A, B, C flat. And if this is going to be a flat, we would expect to find some support in this general zone. And then we would want to push up in a wave 5. And preferably, I would like to see that wave 5 break above the highs at $82,800. And we're just going to have to see, guys, because we could be seeing, instead of a 1, 2, 3, 4, 5, the impulse ends on Monday, we could be seeing a larger correction for our wave 4, where we get an impulse down here, a 5-wave move down, followed by a 3-wave move up, followed by another 5-wave move down to backtest our key support at $74,000. And that would give us more time in our wave 4 correction that is similar in time to our wave 2 correction, which was about 11, 12 days. So we got to be careful with the flat here. I'm not necessarily saying the flat is going to play out. What we want to watch now is how this move down occurs. We want this to be an impulsive move. If it is an impulsive move, I would expect us to drop to 74K. If it is a corrective move, like something like that, or the flat, right? The flat that we just talked about, the ABC flat, then we would expect to kind of find support pretty locally here and then start to break above our 81.4K highs. So Bitcoin is playing out nicely. What I will say here is that breaking that buying exhaustion channel down does suggest that we could see a bigger drop to the downside. I covered this a lot on my channel, and I covered this a lot in the teachings, but when we get that aggressive push to the upside, when you start to see that kind of choppy overlap come in towards the end of an aggressive push, with the bearish divergences being created on every single new high, that is pretty much the prime signal that you could get a bigger reversal or correction to the downside. And we are in the midst of that right now. It is good that we are going into the weekend, but I am going to be looking for a support locally. If not, I'm looking to come down to $74,000. So let me pop back into the chat. Full moon dump. Okay, wow, interesting, because usually the full moon does give us a pump. But yeah, I guess we are seeing that full moon dump. All right. R Pink, much love to you, man. Thank you so much for being here, and thank you for modding for me. Appreciate you as always, and good afternoon to you. Yeah, guys, please do hit the like button. If you do get any sort of insight into the market from this live stream, please hit the like button. Please subscribe to the channel, share the videos, all that good stuff. We have a lot to cover today, and we can cover some altcoins. We can cover gold and silver, whatever you guys want to look at. Just post it in the chat. We'll get to that after we're done analyzing the Bitcoin chart here. And we can also look for some more live trade setups. Yesterday, we won that scalp trade to the upside. That was a 4.5 to 1 risk to reward ratio. And if you guys remember yesterday's live stream, let me just pull it up here. We were talking about how that VWAP was holding, and we got that first initial push down. And then on the second, once we closed a 15-minute candle above the VWAP here, I said, if we close a 15-minute candle above, I'm going to enter a long position with my stop below that low. So that was that long position that I did enter. Let me see. Did I delete that? I think I just deleted it, but it was essentially a long position from this area. Stop was below the low, and we had a, oops. Sorry, guys. All right, let me just redo that. Long position, stop was below the low, and we were looking to target the highs. And really, I was looking to come up to that naked monthly. But I think overall, it was about a 4.5 risk to reward ratio that I got in on this trade here. That scalp long position was about a 4.5. Won that trade. Immediately entered into the short afterwards. I posted that P&L in the Telegram for you guys. But you can see here what we're seeing right now after losing the channel. We bearishly backtested that, and because we are rejecting perfectly on the bearish backtest of the channel, this in some ways is an immediate confirmation that we're breaking the channel to the downside. Now, another thing that I talk about a lot on the channel, as far as exhaustion channels go, whether that's a buying exhaustion channel or a selling exhaustion channel, when you break a channel to the downside like this, you will often sweep the liquidity of the entire channel. So that means essentially sweeping those $75,500 lows. Sometimes you only sweep the liquidity of the second pivot of the channel. And in this case, I'm looking, well, we already kind of did sweep the liquidity of the second pivot, which was that 77.6K low. But I'm primarily looking at this internal liquidity here at 76.6K. All right. Do you like NAMI better than Market Cipher? Well, Matthew, I can't answer that. I like them both for different reasons. I think the money flow on Market Cipher for overall kind of getting the trend of the market is like one of the best indicators you can see out of all the oscillators, all the indicators on the market. I think Market Cipher does a really, really fantastic job of that. NAMI is quicker to confirm bearish divergences, and the money flows based off actual money flow. With Market Cipher, it's an algorithm of money flows mixed with like moving averages. So for me, NAMI, for scalping, NAMI is better. It's quicker to confirm. You get those multiple drives, which gives you kind of more confidence the more bearish divergences that are created. And with the money flow being quicker, you kind of have more of a heads up on whether you're going to see that reversal or not. So I would say they both are good for different things, but the real magic for me, Matthew, is when you use both of them in confluence with each other. That trade setup that I just showed you guys, where, let me zoom out to the 4-hour chart. Especially on the 4-hour chart, you can see here as Market Cipher, we have our initial high on Friday of last week, coming to our Monday highs, coming to our highs that we made to last night. You can see we have 1, 2, 3 drives of bear div, and the money flow actually topped out on Monday's high, and it had been draining out of the chart slowly. And creating that last drive of bear divs with money flow draining was a perfect confluence you needed to enter the short here. I covered that, by the way, in yesterday's videos, that I had seen the confirmations. If we reject from the naked monthly, I will enter the short. Now, for NAMI, for instance, we had the bearish divs confirmed, but then we invalidated them with the Monday move to the upside, and we did print. Now, I don't know why this is saying a hidden bearish div, because a hidden bearish div is when you make a lower high in price action, but your momentum wave makes a higher high. Now, I think it's going based off the candle bodies in this case, and you can see the candle body is a lower high, and our momentum wave is a higher high. But also the money flow, you can see how from that first initial high within the exhaustion channel, we have the bear divs on the money flow. And the 8-hour time frame, which in my opinion is one of the most important time frames to study money flow on. If we go to that 8-hour time frame, this is where the real bread and butter kicks in with money flow and those momentum divergences. You can see the triple highs here. You can see the 1, 2, 3 drives of bear div on NAMI, or excuse me, on Market Cipher. Money flow started to curve to the downside. And then with NAMI, you also see that triple drive of bear div and the money flow bear div. So when that setup is on the charts between the two of them, that is that ultimate trading confirmation I look for. And if I see this, I know it doesn't play out every single time. That's not 100% hit rate, but the hit rate on it is so high. When I see this combination with the two of them, I will at least attempt a trade. Okay. All right. See, you guys are just talking amongst each other. Olga Ivionia, welcome in. Good afternoon to you. Could you cover gold as well, please? Yes, we will cover gold as well. Gold, we can even look at silver. Do you think it can retrace to like $80,500 before dropping again? Normally, in scenarios like this, price gives a back test before the real dump down. Yes. Okay. So great question, Zeus. Let me get into that right now. So here's the thing we're looking at, and I'm just going to clean up this chart real quick. Let me hide this exhaustion channel real quick. If we ended our wave 5 of our third wave, remember our third wave is coming from, this is an internal third wave of a larger 5-wave impulse. I'll turn that onto the chart real quick so it's not confusing. So we have our larger impulse to the upside on the daily time frame. We were looking at potentially ending that third wave on Monday when we hit the 81.1K daily level. And then we're looking for a larger fourth wave corrective move that's going to be similar in time and price, or at least time, to your second wave move. So 11 to 14 days or so. Within the third wave, 1, 2, 3, 4, 5. And then we even talked about on Monday how we did have a confirmed 5-wave move to the upside within this structure here from that weekend low. And remember, guys, this is a weekend low. Weekend lows often do get taken out eventually. But you can see we have a very nice 1, 2, 3, 4, 5. We have a 5-wave move. Because that was an impulsive move right there, that means that, you know, hey, the third wave could have ended on Monday. So if the third wave ended on Monday, this first correction down, the best way to count this as it is as a ABC, running flat ABC, a corrective move. This is not an impulsive move to the downside. Because that was a corrective move, we expected to take out Monday's highs. We also can say that this looks like a corrective move in here. We would have to count this probably as a double zigzag in here. So you're now looking at, because this was a correction and this was a correction, you're looking at some sort of corrective move in here as well to finish a WXY flat. 3-wave move, 3-wave move, 3-wave move, WXY flat. And if it is going to be the flat, we could find support very locally coming up here. And then you would expect to take out the highs. You would expect to continue pushing up to new highs in a larger 5th wave. But let's talk, because we want a, now in that scenario, let me just back up here. In that scenario, your third wave was done on Monday. So ideally, you would want to see a correction that lasts similar in time to your larger wave 2 correction, meaning 11 to 14 days. Well, if we look at from Monday to Friday, that is only 5 days, right? So yes, your wave 4 can be shorter sometimes, but it is it lowers the probability. So it lowers the probabilities that this is going to be, this flat is going to be done now, unless we get the kind of flat and then chop in here over the weekend. And maybe on Monday or Tuesday, we get that move to the upside. That would give us, 7, 8 days. And I would say that's similar in time and price, similar in time to your wave 2. But if that's the case, if we are seeing a flat here, you would expect not only a retracement to $80,500, but you would actually expect an impulse to break above 80,500 and to take out the highs and continue pushing higher to maybe even break $82,800. Now, in a different wave 4 corrective scenario, let's say that our third wave ended, we would have to look at recounting this. This would be You would look at this pullback last weekend as part of your internal structure of the third wave. 1, 2, 3, 4, 5. Then you would look for a 5. You would look for maybe this is a 1, 2, 3, 4, 5. And then you would be looking at the highs on Monday as your overall this third wave. 1, 2, 3 would be done. And then you would be looking for a 4 from here. Shoot, let me see, because actually you took out the high there. So yeah, you would have to look at within this internal third wave, you would have to look at some 1, 2s in here. You have your 3, and then you would have a 4, 5, 4, 5. That would end your third wave of this 1, 2, 3, and that would make your high that we saw last night as the end of the third wave. Now, if that's the case, you're going to be looking for this to be either impulsive down, a 5-wave move down, followed by a 3-wave move up, followed by another 5-wave move down in an ABC, or you're going to be looking for a some sort of larger kind of WXY, more flat correction where maybe we just take out this liquidity and then move up. But in that scenario, you're looking to maybe not retrace to $80,500. So let's say that all of this move down is a wave 1 of a bigger move down. We can pull a Fibonacci golden pocket from the highs to our current lows, which I actually expect to be taken out very quickly here. And you would retrace to around the golden pocket, which, yes, is about $79,900. So you would not expect to make it back up to $80,500. If that's the case, you would expect to see maybe a wave 1 here, a wave 2, and then 3, 4, 5, something like that. Or you would be looking at this as an A wave, a B wave, which also still would come up towards golden pocket, and then a C wave, which would be coming down towards your 382 Fibonacci. And in that case, you would not see probably a move up to 80,500 before coming down to 74,000. So I don't know if I explained that well, guys. I'm sorry. There's a lot of scenarios with Elliott waves, but we are breaking market structure bearishly. So let's just think in terms of market structure rather than Elliott waves. We broke market structure bearishly, which means that it gives us a higher probability, not a guaranteed probability, but a higher probability of making a 3-wave corrective move that makes a lower high before ultimately making another lower low. And then you would start your low, lower high, lower low, lower high, lower low. You would start bearish market structure. We've already started it with taking out this low. So I'm not sure if you're asking that because you're stuck in a position at 80,500, if you're stuck in a long position from 80,500, but you should always have an invalidation for your trade before you enter it. And you should always have a stop loss set where if that trade goes against you, you get stopped out losing as little as possible. And you also want to make sure your risk to reward ratio is at least a 1-to-3 risk to reward ratio. Guys, this is probably the most important thing to understand about trading psychology, but also risk management. The thing is, with proper risk management, if you're taking trades that have a one risk against a 3 reward, you can actually lose 70% of your trades and only win 30% of your trades and still be a profitable trader long term. And, let's say you even lose half of them, you're going to be very, very profitable here. So in my opinion, I like to take trades that are at least a 1-to-3 risk to reward ratio. And sure, I might lose a couple scalps in a row. Last week I was shorting, looking at shorting here, shorting here, or I forget where I shorted. I lost a couple scalps last week, but the one scalp long that I won paid for both those shorts, and especially the short that I'm in right now, that's an 18-to-1 risk to reward ratio. I've already taken 50% out on that. That has paid for all my losses, and so you want to keep your winners running and big, and keep your losers small, and that'll give you the it'll allow you to be successful long term. All right, Anthony, welcome in. Do you think you could take a look at the hyperliquid chart? Yes, we'll look at hyperliquid. We'll look at gold. We'll look at a couple of those. Let me just kind of read the chat and cover Bitcoin real quick, and then we'll get into some of those. Kelvin Changai, welcome in. Monday high to Sunday low. Wait, Monday high to Sunday low. Sunday low, okay. To Friday high. I see a zone for potential C flat around 72,260. Okay, wow, 72,260. Let me Okay, so from Monday's high to a Sunday low. Kelvin, you'll have to give me, what Monday are you talking about? Are you talking about, I mean, the Monday high was the $81,000 high, but the Sunday low after we have a Saturday low before then, but you would have to give me more clarification on what you're talking about for that flat position, but I can try to take a look at that scenario if you do give me more information on that. New Earth Guardian, welcome in, my man. We are bear now, guys. Yeah, I mean, we were looking for the short from here. Now, it doesn't necessarily mean lower time frame. We are bearish for a move down, right? We're actually getting that move down. So we were right to be bearish coming up into this purple box of resistance. But on the larger time frames, I'm still bullish to take out the highs. I'm actually bullish to come up to take out our 82.8K highs, because on the larger time frame, on the daily time frame, I'm bullish. But on the lower time frames, I'm looking for a pullback, and that pullback might bring us all the way to 74K. But essentially what we're looking at on the daily time frame is we're looking at that 5-wave impulse being the greatest probability, a 1, 2, 3, 4, 5. But for the next 2 weeks, we're locally bearish looking for a pullback in here. So it depends on what time frame you ask me, but of course I did get into the short at 81.4, and even yesterday I was scalping the momentum to bring us up to that level where that was kind of our key rejection area, sniper area to look for the short. Last full moon dumped as well. Yeah, Crypto Clan World, I think you're right, and I do remember that. Patrick Schooner, welcome in, my man. Value area low around 72,450. Okay, value area low around 72,450. Man, I'm not sure which value area low you're talking about, because we have a couple different ranges here. So let me just kind of clean up this chart real quick, guys. And I actually want to set an alert on this low just in case we come down there during the stream. What we're looking at is a couple different ranges. So we had our smaller accumulation range that we were in for about 2.5 months, but we're within a larger, potentially weekly accumulation range here. And then this is clearly impulsive. So I would say from last Friday, we have a range that's forming above our pitchfork midline, but this would be the only range that I could be looking at. So if we pull the volume profile of that range, and remember, that's our buying exhaustion channel, so it is appropriate to pull a range in an exhaustion channel. So if we pull that range from Friday's highs, last Friday's highs, today's, the value area low of that range is actually also at our green box of support. So guys, we are seeing very nice confluence here for a support just below the lows we just made. Our 786 Fibonacci is there, and our trend-based Fibonacci extinction is there as well, which, where did I, our not trend-based Fibonacci extinction, but our flat targets in a retracement are there as well. So this green box here, I am potentially interested in taking a long from here if we have low time frame bear dips, because the long opportunity from here could bring us in an impulse up to take out 82.8K. And depending on how we get into this, especially if we grab that liquidity, see a move down here, grab that liquidity, and then get back above the value area low, we can enter the long. Once we get back above the value area low, you would put your stop below wherever that wick is, and you would be targeting at least the highs from last night, which is already a 10-to-1 risk to reward ratio, but you could be targeting up there. That's a really nice long trade, right? And that long trade could break out even up to $88,000 to $90,000. So, yeah, I'm still looking for longs, knowing that overall we're looking for one more push to the upside on the daily time frame. That being said, we are looking for a retracement that lasts, around 2 weeks. This has been 5 days so far, so it's not ideal to see it end now, but it still could play out. And actually what we can do here, let's zoom out onto the 4-hour chart. And if we're looking at the 4-hour chart, we'll go from the lows of wave 3 with a trend-based Fibonacci time, the lows of wave 3 to the highs of wave 3, which we would be actually looking at Monday's high. And you want to make, that overall low after the 382 Fibonacci time. So right now, currently, the low we have now is before the 382 Fibonacci time. So let me zoom in onto the 1 hour. We would want to make a low in about 1, 2, 3, 4, 5. In the next, after 5 hours from now, if we make another low, it could be the low of our fourth wave. And actually, I think I did that wrong. Hold on, because we're looking for our larger degree fourth wave. So you would want to bring this to the start of your third wave. And then that means that we're looking for a low being made after Wednesday, September 2nd. At or after Wednesday, September 2nd. You would want to see that larger fourth wave. You know, so maybe we could range in here all the way, keep making new local lows, and then push up. Or you're going to see that larger dump to the downside to 74K, where you make it after the 382 Fibonacci time on next Wednesday. Now, time is not an invalidation, but it severely impacts the probabilities. All right, let's see. Moving averages on the 4 hour and daily have room to volume gap down to 70K. Well, okay, let's talk about that, because if we do lose our 74K support, I am going to get a lot more bearish on Bitcoin. And also, I would be in a very nice short from the top. But if we look at our range that is now like 6 months long, right? Going back to February, let's just go to the 8 hour time frame. So this larger weekly range that we're in from February, you can see we're kind of in a very nice flat range right here from February. And if we pull the volume profile of that range, you can see our value area high is coming in right at $74,000. So if we lose $74,000, when you attempt to break out of a range, and you do break out of the range with high volume, right? We did break out of the range with increasing volume last week. When you break out of that range, after rejecting from a resistance above, if you come back to backtest that value area high, you really want to hold that value area high bullish backtest. If you do, you would expect to take out the high, in this case at 81.4. If you fall back inside the volume profile, it gets a lot more bearish, and that means you could fill all the way to the bottom of the volume profile and even take out the lows that move was from. Because currently right now on the daily time frame, we do not, even though an impulse is more probable, meaning that 5-wave impulse is more probable, it's a greater scenario to happen, it's not confirmed yet. Like, this impulse is not confirmed yet. Remember, our bearish scenario is where we see an ABC in a 3-wave move. We see an ABC and we roll over, and then you would expect to take out actually the lows at 57K eventually. So currently right now, this is a 3-wave move. And if we fall back inside of our volume profile, it severely increases the probabilities that this was an ABC instead of an impulse, and then you would expect to come down to take out that low. So the bulls do not want to fall back inside this volume profile. The bulls do not want to lose $74,000. CVD, what is CVD looking like? Okay, let's look at the order flow here. So as far as our order flow goes right now, well, we have our low from earlier today. CVD is pretty much flat right now. It's equal, and our open interest is relatively flat as well. Let me zoom out to the 15-minute and let's look at what happened today. The dump that we saw today, is that dump? Okay, this is actually somewhat good for the bulls, you guys. The dump to the downside that we saw is on a decrease in open interest. You can see it's a decrease. That whole entire dump is on a decrease in open interest, meaning that it's not new short positions that are pushing the market down. The bears are not stepping in control and pushing the market down. It's just late longers that we're seeing getting stopped out. It's a long squeeze to the downside, which is not a strong move. You did see, yeah, you could even see you saw some longs stepping in right in here. Longs were stepping in. Those look like new long positions, so we're seeing some of those get squeezed out. You even, yeah, your CVD or your open interest, I know it's hard to see. This was kind of going flat here, so you're seeing a mixture of long and shorts in here. They're getting stopped out. But at the end of the move, this is what's important to see, because this is where the bears are starting to step in. In this, after the rejection from the VWAP earlier today, you can see we came up to VWAP, we back tested. And remember, guys, the VWAP is a volume-based intraday trend. So if you're below the VWAP and you come up to it and you reject, you expect to take out the low. You expect the bearish trend to continue. So upon the VWAP rejection, that is when we saw a lot of shorts coming in, and they were fresh short positions. Look at this. Shorts coming in, they were fresh short positions. So the bears started to take control. The first half of the move was a long squeeze. The second half of the move is bears actually stepping in and continuing to push the price down. Now, one thing that I do say on the channel a lot, and this is true, this happens, if you have a squeeze, whether that's a short squeeze to the upside or a long squeeze to the downside, after the squeeze ends, if you do not see new money coming in to continue that trend, you will often reverse in price and just come right back up to where the squeeze started or around where the squeeze started. But if you see the squeeze end and then you see new positions coming in to support that price, that trend to the downside, that is when it starts to become a healthy dump to the downside. So actually, the first part of the move was a squeeze, and then we saw fresh shorts coming in. This is actually now becoming a healthy dump to the downside. What I will say about that, we now have a lot of shorts that have opened up in this last push to the downside after the rejection from the VWAP. So if the bulls can start to break up and change local market structure, 15-minute market structure bullishly, you could see a quick squeeze to the upside to stop out all of the shorts that have entered in here, meaning you would expect to see a push up to around 79,850 to 79.9K. Right now, once again, because we are rejecting from our bearish backtest of the channel, I'm expecting new local lows to come in throughout the day, and we'll turn on this channel. We'll go back onto the 1 hour time frame. You can see very, very clearly here, we lost the channel earlier today, and we have bearishly backtested that channel. I'll go into the 15 minutes so you can see it a little bit better, but you can see we lost the channel. We bearishly backtested the channel, and right now, currently, we're just seeing a bit of consolidation between the channel rejection and the POC. But because this bearish backtest right here, it makes it a higher probability that we do take out the low. Now, that low from earlier today did front run not only the value area low of our exhaustion channel range, but it also front ran the 786 Fibonacci, and it did front run our flat targets. Yeah, okay, Matthew, you said, awesome, thanks, bro. I've always used Market Cipher B, but I'll give Nami a shot. So, Matthew, if you do want to give Nami a shot, I've actually partnered with Nami to get you guys 50% off. So, if you click my affiliate link in the description, and you, when you're checking out for the lifetime subscription, if you use discount code DIVINE50, you can get 50% off that lifetime subscription to it. So, yeah. Actually, right now is a good time, guys. I'm going to take a second to shout out the partners of the channel, and then we'll go into some altcoins. We'll go into gold. But real quick here, main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on trading fees, and you can earn up to 40% discounts if you do deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on the amount of volume you trade on the USDT markets. So that's not only trading Bitcoin, but it's all the altcoins as well. It's gold and silver against the USDT pair, or any tokenized stocks against the USDT pair. And in my opinion, that's a really great incentive, because if you're trading USDT derivatives markets, just for trading on the exchange, you can earn up to $8,100 extra. And that's a great incentive to trade on the platform. They're offering some of the best initial deposit bonuses in the entire industry. Deposit $100, you can get a 50% deposit bonus, which is over double what most exchanges will give you on a $100 deposit. They're giving you 20% deposit bonuses up to a $1,000 deposit, and 10% deposit bonuses up to a $20,000 deposit. I've also partnered with BYDFI to create a private Telegram community where I keep you guys updated the best I can on trades that I'm taking. I keep you updated on Bitcoin's price action throughout the day, and any of the altcoin trade setups or gold and silver trade setups that we set alerts on during these streams. If we get those alerts that go off while I'm not streaming or making a video, I will pop in the Telegram and let you guys know whether I'm taking the trade or not. It's not trading signals, but I kind of let you guys know, hey, we're coming down to this key support zone or up to this key resistance zone. I am entering the short, or I don't see proper confirmation, I'm not entering the short. So if you're interested in joining that Telegram, it's free. All you need to do is join BYDFI using my affiliate link and then deposit a minimum deposit of $100 or more. You can deposit more if you want to get some of these bigger bonuses, but $100 minimum deposit. Once you've done that, you click the Telegram link in the description of this video, and in that Telegram Verify channel, you're going to type in /verify and then your BYDFI user ID, and that'll get you into the Telegram. /verify your user ID, and it will get you into the Telegram. I have a few other exchange partners, MEXC, Bybit, and Blowfin. MEXC and Bybit are KYC exchanges. Blowfin's another non-KYC exchange. All three exchanges are offering various sign-on bonuses and discounts on trading fees. They are a way to support the channel, guys. Using any of these affiliate links is a way to support the channel. It's a way to say thank you. You can also just hit the like button, subscribe to the channel. That is also much appreciated, and I am trying to grow the channel, so thank you guys for the support there. And then lastly, like I mentioned, we have NAMI trading, which is this momentum and money flow indicator you see at the bottom of your screen here. And I use this for confirmations to enter and exit trades. Actually, a good example of that right now, you can see we already have bull divs between the two lows here on NAMI, and it prints them out for you. If we do take out the low again, it would give us a third drive of bull divs and money flow curving to the upside, and it would allow me at least confirmation to look at entering along in this support below us, around 76.6, 76.8 to around 76,650-ish. So, since I've been using NAMI for confirmations to enter and exit trades, my profit margins have gone up. In my opinion, it will pay for itself in time. If you're interested in purchasing NAMI, I have partnered with NAMI Trading to get you guys 50% off. Just click the affiliate link in the description, and when you're checking out on the website, use discount code DIVINE50, and you can get 50% off that lifetime subscription to NAMI. Everyone that missed the shorts, waiting for a retest. There will be an easy one. Not sure. No, I don't. There in Bellew, there might not be a retest. Okay, just because a lot of people missed out on the position doesn't necessarily mean there's going to be a retest. Or you could say the retest was when we lost it. This back test right here was in some ways a retest. Now you would have to look at that as a scalp, right? But yeah, maybe not, man. Actually, if you missed the short from 81.4, the next best opportunity, in my opinion, was the rejection from the VWAP. Just like yesterday when we broke above the VWAP and we back tested the VWAP here, I entered along here to take out the highs, and that was our scalp long opportunity. So today, if you missed the short on the SFP into the naked monthly point of control, your next best opportunity was to enter a short upon the rejection of the VWAP. And the way you would have played that is as we were coming up to that VWAP, you try to break above it. As soon as you start to lose it, and for me, I would probably wait for the 15-minute candle to close, but as soon as you close a 15-minute candle below it, you would enter the short on the next 15-minute candle, so it would be right here. Your stop would go above that high, and you would be targeting, you would enter the short, your stop would go above the high, and then you would be looking to take out at least the local low. But, and that's only a 1.6 because that wick was so big. But overall, you would have been looking to come down to take out this low. So you would be looking at coming down to take out that low, which makes it a 3.36 risk to reward ratio. That is okay. As long as it's a 1-to-3 risk to reward ratio, you can still be very profitable. So, and then of course, I like I said, I would have left some open until we hit our pitchfork midline, which is a 4.5-to-1. So you had a chance to get in on a short here if you missed up here. Okay. I am looking for a retest of the VWAP. Might not happen. Yeah, the VWAP's pretty far away. So our pink, if we do get back up inside of this channel, actually we could see that this is done with some sort of 3-wave corrective move that's done with, and you could get a move back up towards that value area high of the range. We are bouncing from the POC, and we pretty much hit the value area low. But I would actually, because of this bearish backtest, once again, I am expecting new local lows. It's not guaranteed, but it makes it a higher probability. And knowing that we're going into the weekend, maybe we're looking at some sort of 1 here, some sort of flat here and a 2. This is your 3, and then we're going to see some sort of triangle in here for a 4 before making a 5th wave to take out the local lows. So that would make sense for me. And then after taking out the lows, that's when you would see your bigger retracement up towards golden pocket. And value area high, and then you would look for another larger impulse to come down. Actually, that looks really nice. Let me just do this real quick, guys. And I know we will get into the altcoins, I promise. But if we're looking at an impulse to end, let's just say we're going to come down and hit the bottom of the box, okay? You can see your golden pocket. Well, I guess it's a little bit above the value area high of the range, but it would be pretty much right where that wave 2 liquidity is. So if we see this all as an impulse, we get an impulse could either be an A or a 1. Then you would get a move back up towards golden pocket in a B or a 2, and then you would get a C wave or a 3 wave to the downside. So that would also allow for some nice time to go by as well, to kind of give you more time for that to match that bigger wave 2 that I talked about. Wow, let's see. You're short, Zeus, you're short from 81.4. That's awesome, man. I posted in the Telegram earlier today. I took it on Blowfin, which is one of my smaller accounts, but I'm short from 81,411, I think, something like that. So good job, man. Great trading there. For me, I told you guys that we saw the confirmations ahead of time. We saw them, the multiple drives of bear div on the 4-hour. We saw the multiple drives on the 8-hour. And I told you guys that I was looking for that rejection at the naked monthly point of control. We had everything lined up. And sure enough, what did we do? We came up, we SFP'd Monday's highs right into that naked monthly point of control. So that is, I got in on that short trade. And actually, guys, to be perfectly honest with you guys, I set a limit order there on Blowfin that I forgot about because that happened while I was sleeping. And that's why I'm not in on my main exchange, BYDFI. I'm not in on my main exchange, but I was so confident with the bearish confirmations that we were seeing, I was at least willing to attempt a short from this opportunity. Yeah, 99 likes, only 99 watchers, only 21 likes. Guys, can we please try to get the likes up to 50 likes? Honestly, if you do get any sort of insight into the market from this live stream, I would really appreciate it if you do, guys, hit the like button. It's free for you guys. It shows support for the channel, and it would mean a lot to me. C-Train, much love to you as well. Thank you for joining the live stream today. And Mark Dutch had a quick look around, but am I really the only handsome guy in the chat? Well, I could say, Mark, you're probably the most handsome guy in the chat. It's good to see you, Mark. Thank you for being here, and thank you for modding for me, my man. Eric, what's up to you? Good to see you in here. Guessy, Sunday is your Saturday low. Yeah, I'm guessing that Sunday is the Saturday low as well. So I see what you mean. You're looking for the highs for Monday to the lows on Saturday. Oh, wait, the lows of this Saturday, or was this a Saturday? Let me see. That was a Wednesday. So you're looking for the Saturday lows to the Monday highs to, I forget what you said there, some sort of flat in there. So maybe an A wave here, a flat in a B, and then a C wave to come up. I think that's might be what you mean, but I'm not 100% sure on that. Kelvin. Hello, Master. What's up, Mr. May 84? What about the 3-month? How can we count the Elliott wave there? Is it a 1, 2, 3 on the way? Okay, let's look at the higher time frames. So it doesn't really matter if we're on the 3-month or the 1-month. We're looking at the larger structure. So let me go to the 1-month time frame. I'm actually going to go to my index chart because that's not the index chart. There we go. Index chart here. And shoot, let me go to a cleaner chart. I don't want to delete all that right now. Are we looking for a third wave? And I guess we have to go to the index chart because we have more price action. Well, what I would be looking at is, man, this is a bit tough. This at the very beginning, I don't like to look at stuff at the very launch of the coin. Now, that is the first year of Bitcoin being launched, but we're in bullish market structure still, but we would have to look at this as some sort of 1, 2, 1, 2, maybe all of this is the third wave in this bull market. We got to pull back in a 4, 5. So I would look for another 4, 5. I would look for one more high in here overall, or in a bearish scenario, let's just go from, let's ignore kind of the beginning of Bitcoin's life. And if we're going from, clearly this was a corrective bear market in here. So if we're going from this low, we would have to look at this as a 1, 2, 1, 2, because there's overlap between this high and this low. And then we would be looking at this as, well, you couldn't count that as a 3 because it didn't go high enough. And also you have overlap between the highs here and the lows here. Quite honestly, man, the monthly time frame, it's relatively hard for me to look at the higher time frame Elliott wave count. But what I will say here, and let me just kind of get rid of all of this stuff on the chart real quick. What I will say here is we have what I talk about a lot on the channel. Okay. So what I talk about a lot on the channel is you have the aggressive move up, and then now we're starting to get that choppy overlap in a buying exhaustion channel. Now this buying exhaustion channel goes from the highs of our 2020 bull market at 65K to our lows at 15K up to our current all-time highs. And you can see we're starting to get that choppy overlap. And I would say the aggressive move up was really all of this, right? You have your aggressive move up here, and now we're starting to get the choppy overlap. So could we come all the way down to the bottom of the channel? We could, guys, and that would be at $26,000, or depending on how long it takes. Personally, for me, I don't think we're going to break $32,000. I think $32,000 in a very aggressive bear market, $32,000 would be the low. But we do have some pretty aggressive bear divs. You can see here, that is your bull market highs in 2017 to your bull market highs in 2020 to your bull market highs in 2026. 1, 2, 3 drives of bear div. And even on the monthly time frame within this cycle, 74K highs, 108K highs, 126K highs, you have triple drive of bear div locally on the monthly time frame. So you have very big bearish confirmations for a pretty aggressive bear market. And if we look at money flow, bearish divergences, and even within this cycle, 3 drives of bearish divergence on the monthly time frame. So it is showing that, hey, gosh, we could see Bitcoin absolutely collapse. But I think Bitcoin overall is still bullish, and let's talk about the inverse of that. So on the more regional time frame, we have high time frame bear divs on the monthly. But if we look at Market Cipher B, we have bottomed out on our momentum wave, green dot, and money flow is starting to curve to the upside again on the money flow on Market Cipher. Now on NAMI, which is quicker to confirm, we now between our lows at $60,000 in February to our new lows at $57,000, we have monthly bullish divergences confirmed on NAMI. Money flow is not, and money flow is starting to bottom out here. It's more of a double bottom here, so we don't have a bull div on money flow, but money flow is starting to bottom out and potentially curve to the upside with confirmed bull divs on the monthly. And that is giving us a little bit of the move we're seeing right now. But I would say we just need to focus on really the main thing we want to focus on for Bitcoin to see continuation in a bull market or a bear market is we're focusing on this range from February, right? From the February low at 60K to our new low at 57.7 and this sideways range, because this could be a sideways range in a bear market where then we continue to break down. If we see an impulse here and this impulse breaks the highs at 82.8, it gives us a high greater probability that the bear market low is in. Even if, and this is one of the main scenarios I'm looking for, guys, on the higher time frames, I'm looking at this entire range right here as a weekly accumulation range where we would have the range going into October, November, December, the fourth quarter of 2026, which we know as far as the 4-year cycle is the kind of the end of the bear market. But we would be looking at this first tap as a tap 1. We would be looking at this as a tap 2. And if we break market structure bullishly by taking out the highs at 82.8, then we would look for a retracement to make a higher low, usually around the golden pocket. And then you would get your expansion to the upside. And that would be your accumulation, right? So after taking out 82.8 or maybe even coming up to $90,000, you could still get that move down towards the golden pocket. And then let's think in terms of what is a Wyckoff model to accumulation? Well, essentially, in layman's terms, it's an inverse head and shoulders pattern. So you would say left shoulder, head, right shoulder, expansion, right? And an inverse head and shoulder is a bottoming reversal pattern. But that means that we would have to break the highs at 82.8, and we would want to see this move that we're currently in right now. We would want to see this move be a confirmed impulse with a 5-wave move up. So that is what we're really testing right now. If this turns into a 3-wave move where we make a lower high, that means you're very likely to take out the lows at 57.7. And we could have something called a Model 1 accumulation. I would still be looking at accumulation within this zone, but you would be looking at a Model 1 accumulation where you come down, you take out the lows, and your tap 1, your tap 2, your third tap is lower than your second tap. We also have a channel that I've been following. So if you take a channel, a parallel channel from the lows at 60K to our lows at 57.7K, and you bring them up to those 82.8K highs, you can see that where are we rejecting right now? The top of the channel. And so on the higher time frame, we have our aggressive move down, and now we're starting to see the choppy overlap within a selling exhaustion channel. So higher time frame, if we reject here and we lose 74K, which is the value area high of this range, you could see a move all the way back down to take out your lows, and you would pretty much essentially be just trading the channel, right? Your exhaustion channel. Reject from the top of the exhaustion channel, come down to the bottom of the exhaustion channel. And that would also be around your value area low of your past 2.5 years. If you look at this entire from 74K over, the value area low would be towards the bottom of that channel. So what we're seeing right now, guys, this pullback that we're seeing right now is hyper important for higher time frame analysis. The pullback, depending on how this pullback occurs, it could determine the next 6 months to a year for Bitcoin. Because if it's corrective and then we break to new highs, now all of a sudden you have an impulse, and you're probably going to take out 82.8. If it pulls back in an impulse to the downside, now we would have to look at this as a 3-wave corrective move where, yes, you will see bounces. Yes, you will get good pushes to the upside, but it would be more probable to take out your 57K lows. All right, I should clip that and put that on its own thing. Hide your women. Mark is here. How do you find your daily levels? Artie, that's a very good question. So to find a daily level of resistance or support, you go onto the daily time frame. You set your candles to the daily time frame, and you look at where the candle bodies open and close together right amongst each other. So you can see here, and use the magnet tool, turn on your magnet tool, you grab a horizontal line or whatever, you snap it where there's an open and a close, a red candle and a green candle that close together at that same spot. That's a daily level. So you can see right here, daily level at 62,850. Do we have any other daily levels in this push up? No, 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 no. We had a daily level here at 78,342, but we broke above it. And usually when you break a daily level, you take it off the charts. We had a daily support here at 77,087. We had a daily support here at 78,500. Currently, if we close this candle, by the way, guys, look at this big bearish engulfing candle. That is bad to see a bearish engulfing candle at the top of your channel. This is currently a daily resistance. If we close this candle red, it'll be a daily resistance, which in my opinion is highly likely. So we now have a new daily resistance at 80,269 on the index chart. That is going to be a new daily resistance. And guys, this channel here is super important. If we do see a major rejection from the top of this channel, I am going to have to get bearish. I'm going to have to get macro bearish again. Okay. And it's the same, Artie, by the way, it's the same thing for weekly levels. If you want to find a weekly level of support and resistance, go on to the weekly chart where there's a candle body open and close together. So this daily level is also a weekly level. So I would probably just make it a weekly because the higher the time frame, the better. We have a weekly level of resistance, by the way. You can see this weekly level of resistance at 82,179. That's going to be a weekly level of resistance. Same with the monthly. You just go onto the monthly and you see where a candle body opens and closes together. All right. Yes, we will start going into the altcoins, let me just, Alex, welcome in. Also the weekly flirting with red. Yep. Yeah, I like that scenario. Take out 57K. Yeah. Nature Jojo, man, if we reject here, we are probably going to take out a 57K. Can you explain how bullish CVD and more short long positions opening? Does it go up on more longs and down on more shorts? Yeah. Okay. So Albly, order flow is super, super important. So the basics of order flow, CVD means cumulative volume delta. Essentially, in layman's terms, what that means is positions opening, market positions. So aggressive market participants. That's what moves the market on a day-to-day basis. So if your CVD is going up, that means longs are entering the market. If CVD is going down, that means shorts are entering the market. But you also want to look at it in conjunction with your open interest, because what open interest is, in layman terms, open interest is if positions are opening or closing, because you need new positions to really break, like have a healthy move, right? So if open interest is going up, that means new positions are opening, but you would have to look at your CVD to see if those are shorts or longs. So in this case right here, open interest is increasing. And if we look at that same, if you look at that same area on the CVD, we're seeing the CVD drop here. So what we were seeing right in here was fresh short positions coming in. And we know they're shorts because CVD is going down. We know those were fresh short positions because open interest is going up. So we saw a bunch of shorts coming into support, grabbing liquidity, right? You don't want to see shorts near a liquidity grab. That means it's highly likely these shorts could get trapped and be used for a squeeze to the upside. And actually, that's exactly what happened. If you look at this area, a lot of fresh shorts entered. Well, afterwards, after we grab some liquidity and then we get above it, you see a big dump in open interest, because what it's happening is they're stopping out or liquidating all of these people that entered in here that probably have their stops above these local highs. So it's not good to short near the end of a move or long near the highs of a move unless you know what you're doing. Yesterday, we longed right here, but we knew what we were doing. We were looking to take out this high, and we were looking at the move down was a bit of a squeeze down. So I hope that helps a little bit in explaining that. But order flow is really good and important to look at bullish and bearish absorption and bullish and bearish CVD divergences. That's what I use it for. But it also can help you explain the move, like the move today to the downside that we were seeing primarily. Well, I guess actually, you know what, guys, this is a bit hard to look at in here. We did see fresh longs coming in right here, but then we got rejected the VWAP, and currently for the past couple of hours, we're just seeing a mixture of shorts and longs. That's why this is kind of flat. Your open interest is kind of flat here. Good afternoon, Decrypto. Welcome in, my man. Is there any way to avoid a fake out, even if you have a 4-hour market structure, then a retracement plus 30-minute market structure and retracement at the 4-hour support? Wait, okay. So is there any way to avoid a fake out, even if you have 4-hour market structure, then retracement plus a 30-minute market structure and retracement at that 4-hour support? Rebecca, you're going to have to kind of reword that for me, but yes, you can still see an avoidance of a fake out. Let me go to the 4-hour chart here. So we broke 4-hour market structure bearishly, obviously, by taking out that low at 77.6K. That's a bearish market structure break. But a fake out, do you mean a fake out to the downside and we continue up? Because that is possible. First off, right now on the 4-hour, it's just a liquidity grab. It's just a wick. We're flirting with losing the position right now. But remember, you could see a flat in here, and then yes, you are expecting to come up. So in some ways, that would be a fake out because you broke market structure bearishly, but you would have to know a little bit about Elliott waves to understand what's happening here. But it is possible. Okay, Alex, made it to the stream. Can you check the 4-hour candle close? I'm really looking for a close below 77,830, but mainly below 77,600. So, Alex, we have 20 minutes till our 4-hour candle closes. And yes, it is going to be hyper important, that 4-hour candle close, because if we close a 4-hour candle below 77.6, it makes it pretty much a confirmed market structure break, right? We've already closed 1-hour candles below it. So in my opinion, actually kind of not. I mean, we're kind of closing a 1 hour candle below it, but even with this giant wick of a few $100s, in my opinion, we've broken market structure bearishly. Now, because we've broken market structure bearishly, it means we could put in a lower high before seeing a lower low. But it is flirting on the 4 hour. Let's come back in 20 minutes. Let's see how this is closed in 20 minutes. If you close your 4 hour candle below 77.6, it's not a good sign for the bulls. Because we also have bear divs, right? Oops, we also have bear divs on the 4 hour. Money flow leaving on the 4 hour. Okay, I need to get into the altcoins here. So let's check out. First off, I'm going to go to gold. I'll be quick with these guys. I want to spend just a few minutes on each of these. Wow. Gold rejected the top of our channel. First off, I told you guys last week that I was looking for a rejection from this purple box, right? We knew that this could be a major level to reject from. So we reject. We were chopping down, and I said yesterday in the live stream, there's a few things we could see here because this channel did look, there was two possibilities here. Let me go to the 1 hour chart. There was a few possibilities here that we were seeing a bunch of, in a bearish scenario, you were seeing a bunch of 1-2s. 1, 2, 1, 2, 1, 2. Now you're going to get a big third wave, and then you would want to see some 4 5s, 4 5s, 4 5s coming in, right? That is our bearish scenario. It looks like our bearish scenario is starting to play out here. In a bullish scenario, we were looking, and first of all, on the macro timeframes, I am still bullish on gold, but we need to see right now whether it's invalidating, because hold on, let me hide this here. One of the things we were looking at on gold is a double 1-2 impulse to the upside. So you have your 1 2 1 2, your big push up in a third wave. Now we're looking for a 4 5 4 5, and I'm looking to come up to around 49.50-ish on the date. This will take a few months, maybe a month or 2 months to play out, right? Because you want your 1-2s and your 4 5s to be equal. So if we're looking at kind of where this a month, we could be in a kind of this uptrend, this grindy uptrend for another month. But remember, yesterday I said that this area right here was a good area to see a pullback for your first fourth wave. Well, look at what we have on the chart. There's a reason why I have these targets on the chart, because we're expecting a pullback to be to around the 382 to the 0.5 Fibonacci, because you want to take your, after your 1-2s are done, you have your big explosion in your third wave, which is this right here. You're now looking for a pullback in a 4, and then a 5, and then a 4, and then a 5. And if you go back and watch yesterday's video, I even said this in yesterday's video, pulling back to backtest the breakout of the channel. We're breaking out of this bigger descending channel here. So when you break out, you hit into resistance, you'll often backtest the channel. If it holds, you expect to take out the high. So it's actually playing out absolutely perfectly right now with this being a dump, but we need to see, remember guys, we need to see within this move down, we have all these 1-2s in here. Now we need to see some choppy 4 5s coming in, and it would make perfect sense to me. I'm going to zoom into the 4 hour time frame. It would make perfect sense that we have all these 1-2s right in here. We start to see 4 5s chopping around the channel until we hit the 382. And the 382 is going to be at 44.29. So I would like to see now, you have your channel in here, you get your big move down, and then you start to form another exhaustion channel here. So on gold, we don't even know if the third wave's done with yet. The third wave could keep going, but at the very least, we're looking for gold to find a couple more lows and some choppiness with some new lows. And we will look at that. Actually, guys, I'm really, really interested in longing gold, especially if we make it down to this support level down here, a naked daily point of control in confluence with that 0.5 Fibonacci. I'll be looking to long that to take out the high and even leave some of it open to come up to your $4,900 golden pocket. But essentially, we're looking at this being a wave 1. You have your wave 2 here, internal 1, internal 2. So overall, you have your 1-2s in here. This is your big third wave to the upside. And now we're looking for a 4, and then another 5, and then another 4, and then another 5. So actually, your 4 and then your 5, your overall last 5 would come up to around the golden pocket. something like this. But within this one, you have 2 1-2s in here, so you would need 2 4-5s on this chop to the upside. But right now we're in this progress, which could take us a week or 2 weeks, right? So essentially with gold, we don't have to spend too much more time on it. We need to look for the choppy channel starting, and I would like to see it coming in hitting the 382 around 44.29. What I will do right now is I will set an alert on our 382 Fibonacci if we do come down there with some choppiness and bull divs. So on the lower time frames, let's zoom into the 1 hour. You can see on the 1 hour, all the chop within this channel right here. We want to see now, as we're chopping at the end within this channel, you want to see bull divs between all those lows. And let me draw that a little bit better. You want to see kind of, 1 2 1 2 1 2. So we want to see 3 4 5s. So between all of our 4s and 5s, between these 5s to the downside, 5 to the downside, 5 to the downside, you want to see bull divs coming in between this low, and this low. Because if you're creating bull divs here coming into that third low, that is when you can long that sucker. You'll have good confirmation you can long it. And you would be expecting a 5th wave impulse to take out this high. So actually we have some really, really good trading setups coming on gold, swing long positions coming on gold in the next couple of weeks. Okay, let's go to Hype real quick. I know Hype was next. Hype, USD. All right, Hype. Here's the thing with Hype, guys. I told you guys this in yesterday's video. We had a kind of exhaustion channel coming in here. Remember, I showed you guys that channel yesterday, and then we broke it, and then we started to form a new exhaustion channel, which is the current channel I have on the charts. But overall, let me just come in here. We'll hide this parallel channel. Overall, on the higher time frames, we are rejecting from our pitchfork band of resistance, and this was an area to look for a rejection. Now, at the beginning of our impulse, we were looking for the long from this green box. It was an SFP of the range lows, and it was into a golden pocket. Now, from that low, you can see we have the same sort of choppiness, right? A 1 2 1 2 1 2. So we have our triple 1 2 impulse right here. This is your big third wave, and then are we getting a 4 5 4 5 4 5? We need kind of those 4 5s to come in this choppiness up here. It is a bit tough to count this because technically we could say that the 4 5s are done with. And why I say that is looking at this, this structure right here, you can see that our wave 3 could have ended with this high on last Friday. Our second 5th wave could have ended with this high on Monday. And our third 5 could have ended with this high on, when was that? That was Thursday. So we could be done with this impulse. This impulse right here could be done with. Hitting into your pitchfork band is a good level for it to be done with. Now, if we see a bigger pullback, remember when any impulsive structure ends, you're looking for a corrective move to correct that impulse. So in the kind of a more bearish scenario, you can go from the low of the impulse to the high of the impulse, and you're looking at your golden pocket. You could see a retracement all the way down to the golden pocket. Here's the thing, guys. Let's pull our volume profile for this entire sideways range. You can see we have a sideways range in here. So if we pull our volume profile, looking at that sideways range, your value area high is way up here at $72. If you fall back inside your volume profile, you could see a move all the way back down towards at least the point of control. So let's throw on this with a 786 as well. Now, here's the confluence I really like to see. Your 786 Fibonacci is at your point of control. Your golden pocket is at your lower band of the pitchfork. We are rejecting the upper band of the pitchfork. So the first macro support level for me on Hype would be around the value area high and the pitchfork midline. If you lose that, maybe we see some sort of 3-wave corrective move like this, and then we continue. But in a more aggressive, because this impulse is done with, in a more aggressive correction, you would probably see something like this where you lose it, kind of back test that, and then come down towards your golden pocket. You're looking for a 3-wave structure, and you're looking for an impulse down here, and you're looking for an impulse down here. ABC, sharp zigzag correction. So do we have, and the golden pocket is not the best because look at this. There's not a lot of support within that imbalance right there. There's not a lot of support. We can look at naked weekly and naked daily points of controls. All right, I like this. We have a naked weekly point of control from last week, right at your pitchfork midline. That's going to be really important confluence. 73.75. Also, you can see that the start of all this chop, of all this buying exhaustion channel, kind of the start of that would be right in this support zone. If you come down and grab all that liquidity, it would be right in that support zone. So the first major area of support for me for hype to start looking at a long to take out the highs would be this area right here, 73.75 to 72.5. Okay, now if we see a sharper correction down, your golden pocket is down there. Let's see, did we have any? Nope. Man, you do have a naked weekly point of control at your value area low, which is also going to be at the bottom of your pitchfork. So more important confluence at the bottom. I would say just from this right here is a really important support level. Value area low, naked weekly point of control, and the bottom of your bullish pitchfork. You do not really want to make it down that low though. Another important support level just based off of your point of control in your 786, 58.75. That is going to be an important support level. Now, let me check our naked daily points of controls real quick. All right, you have a naked daily point of control. Also, all of this actually, so we can add this naked daily point of control here. And then what I will do is I will extend that box. So let me turn this off. And other than that, that's our only naked daily point of control. So the box I'll extend to the naked daily. So this zone of support, we have a naked weekly, a naked daily, a value area low, a pitchfork, and your 886 is probably going to be in that zone as well. A little bit lower. Okay. But the main level, the first main level is up here, 73.75 to 72.5. The next big level, which there's not a lot of confluence in here. So I actually don't like this golden pocket a whole lot. But you do have your pitchfork band there. And as far as pitchfork bands go, guys, if you reject the upper band, and this is just my style of pitchfork trading, if you reject the upper band of the pitchfork and you lose the midline, you're likely to come visit that lower band. So the lower band in confluence with the golden pocket, even though the golden pocket is in the middle of this imbalance, I would still at least pay attention to it. And then the other support level would be down very small, value area low, 786 or point of control 786. Okay, those are the main support levels. And remember, this one's already been used up. We already bounced from this one, used up. On hype, could the structure not be done with yet? So we have our 1-2s in here, kind of that contracting diagonal. We have our big third wave. Now it's kind of hard to tell where this third wave is going to end because all of this is so crappy chop overlap, but you do see at least 3 distinct highs in here. High, high, high. So there is a real possibility of our third wave being done with. Also, we're breaking market structure bearishly for the first time. We're breaking that kind of exhaustion channel bearishly by taking out that low at 79.5. That's not a good sign. Okay. So to me, it looks like our impulse could be done with. All right, if our impulse is done with, let's pull another Fibonacci. We're going to go from the lows of the impulse to the highs of the impulse. And remember, in a strong trend, the 382 acts as strong support and resistance. Well, guys, there's no coincidence. Our 382 is right at the back test of the pitchfork midline, your value area high, and your naked weekly point of control. So this, I would say that this move up here has been a fairly strong move, right? That's a fairly strong trend. So could we be seeing something like this where we get a 3-wave move down to the 382 Fibonacci? It would literally allow us to sweep all of this liquidity trail that was created. And then we bounce from here, and then you see a brand new impulse, a brand new high time frame impulse to the upside. I mean, so right now I'm going to set an alert on the naked weekly point of control. I'm going to set an alert on our 382 because I am interested in taking along potentially from this zone. I will set an alert on our golden pocket because I will potentially be interested in taking along from the golden pocket. And then lastly, I'll set an alert on that 786. Oh, okay. We set, so I would have to do that. I would have to pull that separately. Well, we'll look at that if we get down there. But either way, hype is due for a pullback. It looks like it's due for a pullback because it looks like this impulse could be completed. Now, in the larger grand scheme of things, you do not want to see hype break below the value area high. So you want to see this first box of support hold. If we break back inside the volume profile, there's a real chance of coming down to 58.75. Guys, please do hit the like button if you get any sort of insight into the market from these live streams. If you like me covering the altcoins, please hit the like button. Next, we'll go on to Solana. And, oops, that's not the right one. Oh, man. Okay. Remember yesterday, I told you guys, if Solana loses, if we pierce below, pierce above the 1.236 and then start to fall below it, it could be the end of a larger correction. But if we close the daily candle, so I want to zoom out to our daily candle. All right, our daily candle did close above the 1.236. So in some ways, that's a bullish sign that we closed above the 1.236. But today, if we see another bearish engulfing candle right below it, this could be a fake out. What we're looking for on Solana is overall, you have your sideways range, very similar to a lot of coins, right? Your sideways range in here. We're looking for either a 3-wave corrective move, which is geared to end between the 1-to-1 and the 1.236, which we are kind of in that zone right now. Yes, you can pierce above it a little bit and still see the big drop to the downside. Or we're looking at an impulse from here, 1, 2, 3, you know, maybe 4 or 5, something like that. Some pullbacks. Continuation. What I do not like about Solana, this first move up, are you going to say that's a 1, 2, 3, 4, 5? Well, you have overlap between the highs of 1 and the lows of 4. So the only way to count that as an impulse, also, it's an expanding diagonal, which is super, super rare to start an impulse with an expanding diagonal. So that makes it the probabilities, if we're based just on Elliott wave probabilities, we have to say that this is more likely to be a WXY correction. 3-wave move in a W, 3-wave move in an X, 3-wave move in a Y. And if you start a move to the upside with an overall larger 3-wave move, it makes it far more likely that this is going to be a 3-wave move and that you're going to roll over. We are in the zone where we could roll over. Now, in the bullish case scenario, you are going to look at this as an expanding diagonal. Here's your wave 2, and then you're inside the wave 3. 1, 2, 1, 2, 3, 4, 5, 4. So we would have to zoom in on this structure right in here, the lows from 70.5, and we would have to see if this wave 3 is done with. So we'll zoom in on that right now. But if it's going to be a wave 3, well, technically you would have really wanted to make it up to around 121. But let's zoom in on that and see if we can't count a finished impulse. So you would have to look at this. Maybe this is going to be a 1, 2, 3, 4, 5. Your third wave would be the shortest here, I believe. So we can't count it that way. You would have to probably look at this like a 1, 2, 1, 2. Here's your big third wave. You get a 4, a 5, a 4, a 5. So yes, our third wave could be done with. Okay, it's either your third wave or your C wave is done with. If it's a C, you expect to nuke here. If it's a 3, then we can pull our targets. Okay, now say our third wave is done. I want to zoom out to the 8-hour chart. We're going to go from the lows of wave 3 to the highs of wave 3. We're going to put on our targets between the 382 and the 0.5. And this is your zone. And now, guys, I actually see some very nice confluence here. Let me just get rid of this real quick. I see some very nice confluence here, and I'll hide this for a second. We have the 382, which is right around the back test of your pitchfork band, and you have some local liquidity resting down there. Let's see if there's a daily level down there. Yeah, you do have a daily level right here. Artie, that's how you pull a daily right there. daily level 382 pitchfork, the upper limit of your pitchfork band. And then at your 0.5, which I do think is the better support level, the back test of the value area high, your 0.5 in the bottom of your pitchfork band. So to me, this is the better support level. Now, in the bullish scenario, you do not want to lose this support. If you lose this support level, eventually you're likely to take out the overall lows at $60. Not right away, but eventually. It gives the higher probability. In a bullish case scenario, we're looking at this being a 1, 2, 3, 4 here, and then a 5, or you're looking at the 4 coming down to here, and then a 5. I don't like this. This concerns me for Solana. Just like I said with Ethereum. Okay, we can check our naked daily points of control, naked weekly points of control. We have a naked daily point of control, and I'm going to zoom in so I can get a better look at this. We have a naked daily point of control right on top of your daily level. So that's also more confluence of support. This is how we find those boxes, guys. We mark it out, naked daily. We have no naked dailies near our other box, and we have a naked daily here at 87.25 below this liquidity. So that's going to be important. I'm going to mark that out, but we don't want to drop that far. I'm going to mark it out anyway. All right, now let's go look at our naked weeklies. Now, the week has not closed yet. This is our current week, but our naked weekly point of control is going to be down right on top of your naked daily point of control, but it's not confirmed yet. It won't confirm until the markets close on Sunday. But I'm going to mark it out anyways because it's still an important volume support level, even though it's not confirmed yet. It's still an important volume support level. So now I'm actually seeing some really, really, really nice confluence for our first level of support coming in this zone. 97 to 95, 95.3. The more, I shouldn't say better, I should say the more likely support to drop to is 90.6-ish. And you would be looking for an impulse down. Maybe this is actually what happens a lot in wave 4s. You impulse down in an A wave, corrective move up to golden pocket in a B wave, and then the C wave comes down to the 0.5. So you still get a trade from this, but the overall low is made from the 0.5, and then you see the impulse to the upside. What I'm going to do right now is I'm going to set an alert on our 382. I'm going to set an alert on that naked weekly point of control. And I'm going to set an alert. Actually, shoot, I'll have to just do this. I'll set an alert at our 0.5. Now we have it all covered. So as we're coming down there, we can pop in the charts, see if we have confirmations to enter the longs. And I will let you guys know in the Telegram. Remember, the Telegram, guys, if you want to get these alerts that we're setting and looking at these trade setups during the live streams, most of these trade setups occur when I'm not live or when I'm not making a video. So if you want to get access to what I'm thinking when we come down to these levels, join the Telegram. It's really easy. All you have to do is join BYDFI using my affiliate link in the description, and then deposit a minimum deposit of $100 or more. You can deposit more if you want to get the bigger bonuses here. That money you're depositing, you're not paying it to me and you're not paying it to BYDFI. It's your money. You're just depositing it in the exchange in hopes that you will trade on the exchange, like the exchange, and stick with it. But once you've done that, signed up, deposited the minimum amount, you click the Telegram link, and in the Telegram channel, you type in /verify and then your BYDFI user ID, and that'll get you into the Telegram. So that's essentially what we're looking for on Solana, guys. We're looking for a pullback to around 95 or 90.5. And that could take, remember, our wave 2 correction. If it's a wave 2, it took a couple of weeks, right? Actually, it took a month. We could be seeing a pullback for a month on Solana. Slow, grindy pullback for a month. It doesn't have, this is kind of long for a wave 2. So I wouldn't be surprised if our wave 4 takes 2 weeks and then we get that 5. But I am very cautiously optimistic with Solana because remember, this being an expanding diagonal to start an impulse is hyper rare. So honestly, the higher probability here is that this is a 3-wave corrective move and we're about to nuke. I would hate to see that. Let's hope that's not the case, because if that's the case, that means Bitcoin's probably going to be nuking as well. And Bitcoin's probably going to confirm a 3-wave move as well. But we have to keep it in mind. Okay. Let me scroll up in the chat, guys. I know I'm not going to be able to get to everyone's, look at everyone's things like that. Guys, I hate to be this guy, but if you do absolutely want me to look at an altcoin, if you do super chat, I will look at the altcoin. I don't want to be like a pay for, you know, like, hey, you have to pay me for me to look at this. That is not what I'm trying to do. It's just we're getting more and more people that are joining the stream, and it's harder and harder to keep up with everyone nowadays. How many 1-2s can you count since 81.3? Okay, let's go back to Bitcoin. Oh, we probably had our 4-hour candle close. Yep, we had our 4-hour candle close, and it closed pretty much below it. We closed below our low. That's a bad sign, guys. I expected this. I expect to make a new local low. If you remember earlier at the beginning of the live stream, we lost the channel. We came up, we bearishly backtested the channel, so that makes it a higher probability that we're going to take out today's low. We're probably going to see a move down to take out today's low. But if we come down and take out that low and SFP it, I'll look for a long. So essentially the long I'm going to be looking at is if we SFP the low, maybe bounce from the bottom of our green box and start to reclaim it, I'll look for a long. And in that case, the overall target would be taking out the high, because you would be looking for a flat here. So depending, but I would at least take a TP1 before, probably at your golden pocket. Or actually even at the VWAP, I would take a TP1 at the VWAP, which is still a good trade. How many 1-2s can you count since 81.3? Well, the way I would count this drop from 81.4, I would have to say that this is a wave 1 in here. This is going to be a flat right here. In a wave 2, this is your wave 3 right now, and we're probably forming some sort of triangle in a wave 4. And then we would expect a wave 5 to take out the wave 3 low. So if you wanted to try to alter that count, that's the way I would count this if I'm looking at this. But if you wanted to look at this differently, you could say maybe a 1-2, 1-2, 1-2, and then this is your 3, and then you have a 4. We're still looking for now a 5, 4, 5, 4, 5. If you have 3 1-2s, you need 3 4 5s. But I don't like that, and the reason why is, look at your primary 1 is long, but your secondary 2 is so short. Your primary or your secondary 1 is shorter than your primary 1, so that's good. But your secondary 2 is longer than your primary 2. And then your third 1 is about equal to your second 1, but your third 2 is even bigger than your first and your second 2. So it's not, when you see this expanding like this, that is not good for 1-2s. You want to see, really what you want to see is your initial 1 and 2, and then you get smaller and smaller and smaller, kind of creating that contracting diagonal. And then you have the big drop, and then you create the channel at the end, right? That exhausting channel at the end. But you want to see your primary 1 and 2 being the longest in time and price, and then your secondary and your third are smaller and smaller. And we have the opposite of that right now on the 15-minute chart on Bitcoin. A good example of that, a perfect example of that, is Hype. We were just looking at Hyperliquid, guys. And it's a higher time frame, but this is absolutely perfect for those 1s and 2s. If we come down here, you can see your primary 1, your primary 2, your secondary 1 gets smaller, your secondary 2 gets smaller, your third 1 and third 2 are around the same as your second 1 and 2. So this is that perfect kind of stacking of 1s and 2s, and then you get the big explosion. Sear Jim, I'm short from 81,411. So I had a limit order set there because we did see confirmations that we had bear divs as we were coming up there. 8-hour time frame had multiple drives of bear div, and the 4-hour time frame had multiple drives of bear div. I let you guys know yesterday that I was looking for the SFP of the Monday highs into the naked monthly point of control, And I wasn't joking about looking for a short from there. We also had that scalp long position play out from yesterday's live stream for a 4.5 win, 4.5 risk to reward ratio win. All right, I'm going to scroll to the bottom of the chat. Crypto Wonder, see, IDK why people always want up and up only. I love pullbacks. That's where you make your money. Yeah, man. For me, Crypto Wander, I generally make you generally make your money a lot quicker in shorts because you'll see like a grindy staircase step up in long positions, but when the short comes in, it can be aggressive. So for me, I love taking shorts because you can really make good money quickly. And why would you limit yourself to one bias, guys? Up only. You're literally limiting yourself to making half as much money if you're only looking for longs and only looking for up only. Remember, we have to have the mindset as traders here, guys. If you're a mindset of a trader, you're positioning yourself against your own self. I'm still in a long position from $58,200. Now I'm mostly out of that long position, but I'm still in a long position from right here. Along the way, I was adding and taking scalp long positions, but I started looking at short positions last week, and I'm going to hedge short against my own long. That way I'm covered no matter what. I'm going to be in a winning situation. As a trader, you want to hedge against your own trades to always be right. It's not about being wrong or right as far as like I told you Bitcoin was going to go up and it went up. You want to be wrong or right in terms of am I going to make money even if I'm wrong as far as my bias. So if you guys want to become long-term traders, I would really suggest to get into that psychological mindset. I would really suggest to take a TP1 quickly, move your stop loss to break even. It's a risk-free trade, and then let the rest run. Let your winners win and run. All right. It closed below. Yes, it did close below 77,600. And I do think, like I just said 5 minutes ago, I think we're coming for the lows, guys. We're going to probably, what looks like is forming right now to me is some sort of triangle in a wave 4. And in wave 4s, triangles are really, really common. So I would say we're probably forming some sort of triangle here in a wave 4. Now, the thing is, though, with a triangle, sometimes you will see the market makers like to do this. They like to break it to the upside to grab the local liquidity at the top of the triangle, and then they'll see the move down. So I wouldn't be surprised right now if we break up to grab the highs at 78,131. And then we drop. And that would also be another bearish backtest of the channel. And if you have another bearish backtest of the channel and you reject, you're definitely looking to take out that local low. Solana to $50. Man, Solana, if it breaks $60, we do have some support at 58, and we would have a nice SFP into that. But Solana could drop all the way to, like, I think it was 42 is a major support. Okay, let me see. Hey, Divine Hood, 2018 bear, August, 25% pump led to a lot lower. 22 bear, early September, 25% led to a lot lower. Wonder if the pattern continues. Well, Dillian, that is actually really observant of you. And yes, I mean, we are in a bear market, and we know that bear markets generally do tend to have these pumps that get everyone bullish, everyone longing towards the top, and then it drops. Let me show you guys on the daily time frame. This bear market has been brutal for a lot of traders, and I have to say we have traded this bear market a lot of thanks to the pitchforks and to the anchored VWAPs. If you know what to look for, you can really look at nailing these trades. But I remember in this move, specifically in this little portion of the move, we saw so many people getting hyper bullish saying 100K coming, new all-time highs coming. And I was really, really cautioning and steadfast in this range that this was going to be a 3-wave corrective move before dropping. We were even looking at shorting the anchored VWAP. This anchored VWAP was also, I forget what else, was the point of control of our range. So if we pull that range of 2026, it was the point of control of the range as well. Point of control anchored VWAP. As we were coming up here, so many people were longing here, and I was cautioning, go back and watch my videos if you don't believe me. I was looking for the shorts here, and I was looking to come down to take out 60K. Now, you always see that towards the end of the move, everyone gets bullish, and then it drops on you in a bear market. 3-wave corrective move. Again, in this sideways range here, I was cautioning everyone a month beforehand. Go check my thumbnails on my video. Major swing short possibility from 82.3 to 82.5. Pitchfork midline, that was our golden pocket. If you pull a logarithmic golden pocket from 98 down to 60, that was the golden pocket. I'm telling you guys, we were looking for that 3-wave corrective move. A lot of people started longing in this little bit right here. We saw so many longs enter in that, and that's the same kind of trap. So what happens on this one? Could this be some sort of repeat of the same type of 3-wave aggressive move, right? And your C wave is this 1, 2, 3, 4, 5. Your C wave is finished, and we saw a lot of people longing specifically in here. Really, once we broke the value area high, we started to see a lot of people long. So in our bearish case scenario, and Dylan, we do have to watch out for this because we technically have not broken market structure bullishly yet. We need to break above 82.8. But in the very bearish scenario, you have a shitload of people longing in here. And if this breaks back into the volume profile, you could see that big flush down, right? So we have to be cautiously optimistic as bulls, like I am. The higher probability for me is that this is going to be an impulse. 1, 2, 3, 4, 5. The higher probability is it's going to be an impulse. But as a trader, we have to keep both scenarios in mind. Knowing we are in a bear market, we have to keep both scenarios in mind. And that's why I've been looking for shorts at the anchored VWAP and this purple box of resistance. The main reason I got really bullish here, because this was such a crucial support level. I mean, I can't express enough how crucial that was. You know, that was the bottom of our bearish pitchfork. If we look at our macro pitchfork, that was also the midline of our macro pitchfork. It was our anchored VWAP from the bear market lows. We had a naked monthly point of control resting right there. I mean, and we also had another multi-cycle pitchfork resting at those lows. Multi-cycle high time frame pitchfork resting at those lows. You can see here, we literally rejected the exact to the dollar, the bearish backtest of the pitchfork band up here. And that's another reason why I was looking for a rejection up here. We had multiple pitchforks up here. You had the midline of your bearish pitchfork up there. You had the lower band of your multi-cycle pitchfork up there. And I was looking to short this to take out 60K. We were looking for swing shorts here to take out 60K. We were looking for swing longs here to take out 67.3K. Honestly, guys, Bitcoin has been trading fantastically. If you know what to look for, very technical. It's been really nice. Let's just say that. Thank you, man. Crypto Wanderer, thank you for the comment. Chillin', taking notes. Good stream today. Well, thank you so much, man. I appreciate the comment. Okay, IDK. Okay, I got that. All right, I'm just going to scroll up in the chat here. Turbo looks like it's trying something. Let's check that out real quick. Turbo USD. Yeah, it's pushing up. We're hitting a naked weekly point of control. Be very careful here, guys. But what I see on Turbo is it looks like we were in some sort of triangle. Let me just grab, and your triangle's in a fourth wave. Remember, guys, we're looking at, let me zoom into the 4-hour time frame. We're looking at an impulse from the lows here, right? And we covered this, I think it was yesterday we covered this. This could be some sort of contracting diagonal in a wave 1. Here's your 3-wave pullback in a wave 2. Here's your wave 3. And then what we would be looking at right now here is a triangle in a wave 4. So you're breaking out of your triangle and the target is to take out the highs. So we had the target of your wave 3 highs right into a naked weekly point of control. So this could be done at this naked weekly point of control, but it doesn't look like it because let's look at the impulse. If this is a triangle in a wave 4, this low right here, 1, 2, you're in your third wave. You would still need a 4 and a 5 in here. Yeah, or you could even count from the lows. You would have to look at a 1, 2, 1, 2, 3, and then you would look at 4 5s, 4 5s. Either way, it looks like we're going to get a couple new highs being made, at least one more. If this is a 1, 2, 3, 4, 5. So let's pull our trend-based Fibonacci extinction here. Now remember, the minimum target of your wave 5 is taking out your wave 3 highs. We have taken out the wave 3 highs. And look at where we rejected, right at the 1.618. So that makes sense. So now if we're looking for a wave 4 pullback from this general area, you want to see it last about the same length as this. So what is that, a day or two? 1 day, about, yeah, a day or two, let's say. So maybe we're going to see a pullback over the weekend and then get one more high. Or maybe this third wave is going to continue. Remember, the third wave doesn't have to end at the 1.618. It's just a common target for it to end. We can zoom out here, back to the daily time frame. Oh yeah, you're at your range point of control too of this previous range. You can see this previous range right here. You're at your range point of control. We can get rid of that pitchfork. Now what we can do though, because you can see this range in here, you're breaking back inside the value area low of the range of your previous range. So now that we're breaking back inside the value area low of this previous range, we can combine the two ranges. And now we're going to be looking at the important, so you're at your point of control of the two ranges. I would really, your wave 3 ended at the point of control. You saw a triangle in a wave 4, and your wave 5 is breaking up to hit the naked weekly point of control. But within the wave 5, you still don't have the sub 5 counts. So you could bust up. You could continue to break up to new local highs. Let's zoom out to the weekly. On the weekly time frame, do we see any weekly resistances? I mean, you don't have a weekly resistance until much higher. Monthly. All right, we are also hitting a monthly level of resistance, guys. So we have to be careful because we're at a naked weekly point of control and a monthly level of resistance. Let's go back to the daily. You can see here, where was the resistance? The resistance was this. Your naked weekly point of control, your 1.618, and your monthly level. Now, I'm still looking for one more local high. So maybe next Monday we SFP the high we just made today. Let's look for our wave 4 pullbacks. Now, I'm not going to keep this purple box here because it wasn't there ahead of time, and I don't like to mislead anyone. But that would have been the area. If we were looking more closely at this, we would have been looking at this support or resistance level. Let's go zoom into the 1 hour. Now, if we're looking at the 1 hour, ooh, actually, guys, this here is a very clear 3-wave corrective move. So we can't say, we would have to say something like your impulse is starting from here. We would be looking at some sort of 1, 2, 3, 4, 5. We would have to zoom in on lower time frames to look at that. And then you could be looking at, I mean, this doesn't even look very, I mean, this definitely has a triangle in here that broke to the upside. So if we're looking from that low, we could be looking at this as a wave 1. We could see a pullback in a 2 to the golden pocket. Then you would have to do 3, 4, 5. You'd have to be looking for one last push up. Now, you would want your push up to be similar to this push up, you know, in price. So yeah, it does look like we could get some more movements, maybe towards that value area high, which is coming in around 00126, let's say. I mean, this, guys, model 1 accumulation in your exhaustion channel. Look at this aggressive move down, choppy overlap in the exhaustion channel. I mean, how many, you guys, this works so well. Anytime I see this, tap 1, tap 2, tap 3, expansion. Right? In the expansion, you want to see a 1, 2, 3, 4. So technically with today's highs, we could be ending the impulse, but it looks like we're going to continue a little bit higher. It looks like we could continue up towards the value area high, but this is your big level of resistance. It's your point of control, your monthly level, your naked weekly point of control. So we got to be very careful about that. Also, if we pull a golden pocket from the highs of this larger range to the lows, and we look at our golden pocket, now we're going to put that based off log scale because this is going to be more than a 30% drop. Golden pocket value area high. That's the perfect area to end a wave 5, guys. Perfect area to end a wave 5. So next level, and I'll set an alert here. I'm actually going to set it on the 0.65 though, because I like where that's at. So once we get to the 0.65, we could actually be looking for some swing shorts. Now, I'm not going to say to take out the lows, right? Because we're looking at a 1, 2, 3, a triangle, and a 4, and then your wave 5 could come up here. So we're looking to short the end of the wave 5. What we're looking for is we're looking for a short to come down. What the heck is going on here? We're looking for a short to come down to the golden pocket. So we would pull a golden pocket from the low of the impulse to the high of the impulse, and you would be looking at that golden pocket to come down there, which, so you would be looking for something like this, which is a 6-to-1 risk to reward swing short position. And that makes sense because you can see that golden pocket is probably going to be at the value area high of this range. If we pull that range, yep, value area high, golden pocket. But that's speculation right now because we haven't come up to hit the value area high in golden pocket. So we first need to wait. All right, let me scroll back to the bottom of the chat. 4-hour close bearishly, looking good for the bears until 73K-ish. Yeah, I would say 74K. Let's get back to Bitcoin real quick. So on Bitcoin, you can see that of our 6-month long range, February to current price action, the value area high is coming in at $74,000. And if you pull your 382 Fibonacci, it's also coming in at $72,000. So if you go from the lows, where are we at here? Here we go. No. From the lows of wave 3 to the highs of wave 3, your wave 4 target, you're looking to be coming in between the 382 and the 0.5. So look at that. Your 382 is going to be right at your value area high. And this box is a little bit outdated now. I could actually bring that like that. Like this is really where you want to see your wave 4. So essentially, we're just looking for, on the daily time frame, you had your wave 1 here, your wave 2 here, your wave 3 here, your wave 4 to pull back to around 74, and then you want your wave 5. You really want to see that wave 5 break above 82.8. It doesn't have to, but it would be the most bullish scenario. Please do hit the like button, guys. Please do subscribe to the channel. If you get any sort of insight into the market from this live stream, I really would appreciate the support of hitting the like button. Let's see if we actually can't get up to 100 likes today. That would be really awesome. Sui. Yeah, we can check Sui here. Ooh, man. All right, here's the big thing on Sui. Let me just get rid of some of this that has been tapped. Let me see, has this daily level? That's an old daily level, so we can get rid of that. The big thing with Sui. Okay, we were forming support at the bottom of the pitchfork. We SFP'd the range lows right into our big box of support. This is our macro support level. So you can see we had the SFP, and once again, tap 1, tap 2, tap 3, that's that selling exhaustion channel. You get that third tap, you have the bull divs in between those lows, you get the expansion phase. But look at where we expanded to. We came up to your previous range point of control and the pitchfork band of resistance. Okay, now remember on XRP how we were talking about, unlike Bitcoin, this is straight up. You didn't see a pullback in between. So all of this on the higher time frames, all of this could be a wave 1. So then we're looking for a pullback in a wave 2 before seeing a big wave 3. So if we pull a Fibonacci from the lows to the highs, let me just move this over and put this back here. And I just want to see if this is more than a 100% pump. 50%. Okay, so now we're looking at the golden pocket. Golden pocket 786. So we're hitting the golden pocket already, and we're not really seeing reaction that we want. we should probably look towards that 786, which does make more sense because it's going to be at the bottom of our pitchfork. We can also pull that volume profile for this range again. And your point of control is down there too. So I would say actually you had two support levels. You had the support level of the value area high golden pocket, which is not really holding. You can see you came down, you bounced from the golden pocket, you made a lower high, and currently we haven't made a lower low, but you're around that golden pocket value area high. That was your first major support level right in here. What makes more sense to me is that we're going to drop towards the 786 and the point of control, which is also the bottom of your pitchfork. We have a daily level. Let me make sure that's actually that's not a fresh daily level. And then we'll look at our naked weekly points of control. That's from this week. It's not closed, not confirmed yet. We have no naked weeklies below us. Let's see if we have a naked daily below us. Interesting. So we actually have a naked daily just below the low from Wednesday that has not been tapped. Let me go on to the 1 hour just to make sure. Okay, it has been tapped. That's why I like to use the 1 hour, guys. You can see that's where our bounce on Wednesday was from. Okay, essentially then what that means is there's no real support other than value area high golden pocket, which we're attempting to chop around right now. But what this looks like to me is it looks a bit impulsive. Wave 1, wave 2, wave 3, wave 4, and it looks like we're going to come down in a wave 5. It looks like we're going to take out Wednesday's lows. Ah, man, okay, we would actually have to say this is a pullback and this is a move up. 1, 2, 1, 2, 3. If we start this move down with an impulse, though, you're not looking for a big wave 3 to take out the high. I would just say local support is going to be that green box below us. 70 to 69, 72.6 to 69, let's say. But it's the move down, depending on this move down, if it's impulsive, that's not a good thing. So you might get a long from here, but it might make a lower high before coming down again. But I would still look for a long from there on SUI. $15-minute, yeah, it's a wave 4 triangle is what it looks like. So we're about to break that down, guys. The way I would count the move down from last night's high from 81.4. Wave 1, here's your flat in a wave 2. This is your wave 3. This is your wave 4, and then we might see a new low in a wave 5. And we could come down to take out this low at 76.6 because you can see this low is at the bottom of our box. I have an alert set on that, even though it's not on the chart. I believe I have my alert set there. Yes, we do have the alert set there. So I will let you guys know if we SFP that low, I'll look for a long. But with context, right, guys? So either this is going to be an A, B, C. You're going to SFP, you're going to take out this low. You're going to come down here. In an impulse, a 1, 2, 3, 4, 5. And then from that low, you could break up to new highs. That's the flat scenario. The bigger scenario, the bigger, more bearish scenario is that this is a 1, 2, 3, 4, 5. You get a lower high retracement, and then you get the move down to 74. So if I take the long from 76.6, I will at least take some profit on a lower high just to lock in. And then I'll leave some open to take out the highs. We have to be aware of both scenarios. So because of that, you have to at least make sure you're taking some profit on a lower high. I'll walk you through that the best I can over the weekend. Okay, guys, if you posted an altcoin that I didn't get to, would you just repost it at the bottom of the chat so I don't have to scroll through everything and check it out? Also, please do hit the like button. Remember, if you want to join the Telegram and get these updates over the weekend, all you have to do is join BYDFI using my affiliate link in the description below, deposit a minimum deposit of $100 or more. Once you've done that, click the Telegram link and type in /verify in your user ID for BYDFI and it will get you in. Okay, I see SYN, Alex. I'm sorry, I missed that. Let's go to SYN USDT. Okay, it looks like we were potentially looking for a, okay, this is that macro bullish scenario on SYN, was that this is clearly impulsive and we're looking for a wave 2 to come down to the golden pocket, and then we're looking for a wave 3 to come up way high, 3 and then a 4 and then a 5, right? So you're looking for an impulse. But essentially what we were seeing on SYN is you started to see a bottoming consolidation range here. You took out the range lows and then you broke market structure bullishly, right? By taking out this high at 13.75. And because you broke market structure bullishly, there's a higher chance of making a higher low before making a higher high. So we'll have to zoom in here because this is also, yeah, that's the bullish backtest of the value area high of your range. You can see this is your value area high of your accumulation range. So after you break out of it, you're looking for the backtest of it. If it holds, you continue higher. And that is also your golden pocket. So let's zoom in here. The channel, we've broken out of this channel for a long time. The reason we had this channel on the chart, because when you're correcting, when you see a very aggressive move like this, and then you see this choppy, overlappy channel, it's a corrective structure, right? So when you break out of that corrective structure, you're looking for kind of continuation. So we can get rid of the channel, at least hide it for now. And then we're looking at really essentially this move here. Wow, we've had an alert on this low for I think over 2 weeks, since the beginning of August. We've had an alert on that low, but this thing is just chopping sideways. Now, what I don't like from that low, are we counting a finished impulse in here? So you have a 1, 2, 3, 4, 5. So there is a 5-wave impulse that can be counted here. Also, this, let's just be real, this looks impulsive, right? Let's turn on our volume, see if our volume is increasing. Volume was increasing during the move. So yeah, impulsive structure to the upside. Now we're looking for, after that impulsive structure, and remember, you're bouncing from a macro higher low golden pocket. So now we're looking essentially for a, if this is all a wave 1, we're looking for a wave 2 pullback. Man, the wave 2 pullback is very long in time. It's a very flat sideways range. But that's essentially what we need to be looking for, is coming down. And remember, if we look at our golden pocket 786, I told you guys I like this 786 3 weeks ago. I told you that because after an impulse, you're looking for a higher low before a higher high. Now, all we've done is extend that. It looks like this could be even some sort of crazy long triangle that's forming that might break down because you broke into the triangle. So now you could break down from the triangle. But essentially, you're looking for an SFP of this low. And after an impulse, you're kind of looking for an A, B, C to come down, and then you're looking for continuation. So nothing has really changed. We've just been going sideways forever. But what I would essentially be looking at is, the only trade I would be interested in is the SFP of that low into your 786 and then get back above it. We can also just look at the volume profile of this sideways move. So you're at the value area low. You can see rejection from value area high many, many times. You finally came down to hit the value area low today. There is a real possibility you could just keep chopping within this. There's a real possibility that you could bounce from here and come up. Now, I would not even be interested in trading this micro range in here. For me, the only trade I would be looking at, and I have an alert set there, Alex, already, is that 0987 into the 786, which I will set an alert on right now. So essentially what I would be looking for is this to break down, hit the 786 and reclaim. Once you do that, that's when you can enter the long position. And remember, that long position could be a macro long position. What the heck is going on with this thing? Oops. Right up here. So you'd enter the SFP, your stop would go below that 786. And your first target would just be taking out that high. So that is still, you know, a 15-to-1 risk to reward ratio. But if you're looking at this being a larger 1, 2, even an ABC, right? ABC, you're looking eventually to take out this high. So that would be your overall TP. If you're going to hold this macro high or low golden pocket, this long position, that's why it was so freaking high up here. You could be looking at 170, 180 risk to reward ratio. Jesus Christ. You know, that clearly wouldn't be my first TP. My first TP would be breaking above this high right here. But that's essentially all we can look at right now. And I don't like the way this is consolidating here so long. I mean, to me, yeah, it's not the best thing. Yes, you can see my volume profile settings. So if we go on to the volume profile settings, row size, actually, I don't know why it's at 111. I usually like to use a row size of 200. So I set my row size to 200. The rest is stock. Your value area, sometimes you can bust this up to 71 or down to 69, but generally I like to use a row size of 200. You can see if I do 200 here, it brings the value area low a little bit lower. If I leave it at 111, it actually, yeah, so I think I was doing some testing on different row sizes. I don't know why, because I did 242 because I know Jason Casper uses a row size of 240. Maybe I did end up going with 111. I can't remember now, but I was doing different tests with volume profiles to see, you know, because I think stock it comes with 24, which is absolutely horrible. 111, and I did like 150, I did 200, I did 240. So maybe I did leave it at 111 for a reason. I don't know, you can play around with that, but I would at least, the minimum I would go for row size is 111. Oh, okay. Let's, I remember Zcash was already on the list. Sorry guys, I will look at Zcash. Oops. Zcash USD. Oh, it's ZEC. Well, Zcash is hitting the top of a pitchfork band. We lost it. Now we're in the process of backtesting the lower limit of that band. But Zcash looks actually really nice as far as the impulse goes. So first off, look at this pure distribution pattern right here. Left shoulder, head, right shoulder, 50% dump to the downside. Now, we knew that this was likely to be a distribution pattern. Also, tap 1, tap 2, tap 3, distribution, right? But from that low, there is a way to count this as an impulse. A wave 1, wave 2, wave 3, wave 4, wave 5, and that would be a contracting diagonal in a wave 1. You have your wave 2 pullback to the golden pocket in the naked weekly point of control. Look at, we were looking for a long from there. We were looking for a long from here. Now, you get another push up that's kind of grindy and overlappy, but this would have to be classified as a second wave 1, and this would be a second wave 2. So you have a 1, 2, 1, 2. This is part of your third wave. So what we want to analyze is from this low here, a 1, 2, 3. We could be in the 4 right now, and we would even need one more high to finish your third wave. After the third wave ends, we're going to be looking for a pullback that's similar to this. So after your wave 3 ends, you might see a pullback, and generally your higher degree wave 4 will pull back to your lower degree wave 4, and then you get a wave 5. And then you would need another 4 and then another 5. Because if you have 2 1 2s, you need 2 4 5s. Okay, so ZEC overall is bullish. Now you can see on the chart for our lower degree wave 4 within the third wave from this low, 1, 2, 3, we're looking for a pullback to come to around the 382 or around the 0.5. You might see, oops, and guys, it's starting to storm pretty hard here. So if the power goes out, if the stream cuts off, you know that I got wrecked. Storm wise, got wrecked, internet down. Yeah, we could look at the small volume profile, but to me, it looks like that we're just looking for some sort of corrective move. This looks like a 3-wave move here. We could have that 3-wave move here and then another sort of 3-wave move down, but we're looking for some sort of corrective move that's going to be similar to this flat right here. WXY flat or whatever. All right, what is... Oh, and that's your previous high. So when you break above your previous all-time highs, after rejecting from a resistance, which you can see very clearly, we're rejecting from the pitchfork band of resistance, sometimes you will come back down to back test that previous high and then continue. But yeah, I would be looking to come down around 712.5 to 666-ish, let's say. You can see this first drop right here. Actually, yeah, from that first drop, we could say that this is a drop and then a 3-wave corrective move followed by another 3-wave corrective move. And then you would be looking for some sort of overall. Actually, I don't know. That's a bit difficult to manage. I would be paying attention to this range. You're at the value area low, this range. I do like the liquidity trail that's building right here. But essentially, you want to come down and hit that 382. It doesn't have to. Remember, that's the primary target, but the minimum target is like the 236, which you have hit the 236. All right, let's see here. Yeah, you had some pretty bad bear divs as you were coming up into that pitchfork band as well. Overall, on ZEC, you are still looking for new highs. Based in the one more bearish scenario where we see a major rejection from where we're at is a contracting diagonal. Wave 1, wave 2, wave 3, wave 4, wave 5. And this would be a larger contracting diagonal that is ended. And then you would look for a move all the way down towards the golden pocket 786. Because when a contracting diagonal ends, you generally dump pretty deep. So in the bearish scenario, you would be looking for a move down towards your golden pocket 786. But let me see. I think this is more than a 100% move to the upside. Yeah, that's over 250%. So we would have to put this on log scale. So you would be looking for a move down towards your POC golden pocket or your value area low 786. Actually, this makes perfect sense. Your two macro support levels on ZEC. This level right here. And then, yeah, I would even take that liquidity there. This level right here. So those are your two very macro support levels. And that's the case that this is a contracting diagonal in here. But if it's a double 1-2, now remember, double 1-2 impulses are more likely than a contracting diagonal. So if you're going with probabilities, the probability you want to start with is that this is a 1-2, 1-2. You're in a third wave right now, and then you're going to see some 4-5s coming in. That is, you have to go with that first because that's a higher probability. But A lesser probability, but still not out of the picture, is that this is a 1, 2, 3, 4, 5 contracting diagonal, and you're going to see an aggressive move down towards your golden pocket or an aggressive move down towards your 786. And we'll know because if you start to fall back inside your volume profile, this whole upper range in here, if you fall back inside your volume profile, which look at, it's at the bottom of your pitchfork, you're expecting a quick flush down. So we want to see how this reacts. I'm going to set an alert on the 382, and then we'll kind of go from there. You know, we have to just watch this. What I would say is that this kind of chop that we're seeing in here looks corrective to me. But even if this is a contracting diagonal, even if the case is that this is going to be a 1, 2, 3, 4, 5, within your fifth wave, you're still not done. You have this, a 1, 2, 3, 4. You would still need one more high to be made. So the next high, guys, the next high could be a freaking awesome swing short. What I'll do right now is set an alert. As soon as we break that high, we can start to pay attention to this. So we'll put SFP. I'm going to come in here and we'll do, let's do possible, yes. Sure. Okay. But what was I just going to say? All right. One, two, three, four, five. Yep. Even if it's not the contracting diagonal, even if it's not a 1, 2, 3, 4, 5 like this, and then you're going to dump hard, even if it's a double 1, 2 where we have a 1, 2, 1, 2, and then the third wave ends, we can still look to short this, but because the double 1, 2 is more probable, you would have to look for the higher degree wave 4, and you would look to at least take some profit at that higher degree wave 4 support. And then you would look for a 5, and then another 4, and then another 5. So that's what if we short here, we would at least want to take some profit on your higher degree wave 4 support level. Loving the, Chris, thank you so much for the comment, man. Loving the analysis. Thank you. How about taking a look at XMR? Would be curious to, yes, we can check out XMR. Where is the target flat? Please, wave B and C. The targets for a flat are between the 1.236 and the 1.382. So if you pull a Fibonacci, your flat targets are between the 1.236 and the 1.382. Now, sometimes an expanded flat can go to the 1.618. But let's go back to Bitcoin real quick, and I'll show you what I mean by that. So if you're looking at Bitcoin here, and you're looking at this being some sort of flat from Monday's high, you know, whether it's a WXY or an ABC, you're looking at some sort of, you want to take your Fibonacci from the lows of the move to the highs of the move, and then you look at your 1.236 to the 1.382. Now, it's the same thing with this move down. If we're going to see an A wave here, and then a B flat or a W wave here and an X flat, you're going to pull your Fibonacci from the high of the move to the low of the move. And you're looking between the 1.236 and the 1.382. That's your kind of primary targets. But remember, your minimum target is actually the 0.9 Fibonacci. So you could do this. Your minimum target's the 0.9, but the very big target that happens a lot of the time is taking out the highs. You'll SFP the highs. So generally for that first move, a major flat, a flat will always come down. It will SFP the highs and then get the drop. And that third drop is usually where it goes to the 1.236 or the 1.382. But the first piercing of the highs generally will just SFP here. Okay. Gosh, there was a lot to cover. Okay, Ethereum. I want to check Ethereum really quickly, guys. I'm going to be quicker on these altcoins. Ethereum is essentially in a range up here. We did reject that lower high golden pocket. We are at the value area low of our range. And remember, we were looking for the short from 25.48. Actually, I think I'm in that short. because we set an alert here, and we were looking for if it's going to be an overall larger corrective move. And the reason why I'm looking for Ethereum to be a larger corrective move, because the overall low is this low at 1505. This low's at 1510. It's $5 higher. Now, could you say that this is going to be a 1, 2, 3, 4, 5? No, you can't, because the starting move is a 3-wave corrective move. Even if you said 1, 2, all of this is a 3, you can't still count this as a wave 1 because there's only a 3-wave move in here. The larger scenario is that we're looking at a ABC up. You're at your zone between the 1-to-1 and the 1.236, and you could roll over to take the double bottom lows into the value area low. So I was looking for possible swing shorts as soon as we SFP'd 25.48. Now the bullish scenario, it's a double bottom. It's a double bottom. It's a higher low by just $5, but there is a valid count in here for an impulse 1, 2, 3, 4, 5, something like that. You know, you'd have to look at the lower degrees here. 2, so wave 1, wave 2, 3, you could get a pullback in a 4 before seeing a 5 and coming up to around 2,700 or even 3,200, 3,300. You have taken out your range highs. So this is different from Bitcoin. You have broken weekly market structure bullishly by taking out this high. So it's a bit confusing here because as far as Elliott waves go, the higher probability is taking out these lows. But as far as market structure goes, you have broken your highs and you've closed daily levels above your range highs. So even if you see a pullback, you would look for a higher low before a higher high. Ethereum is honestly a bit of a mind twister here, but what we want to see, let's pull our volume profile from that low, range low at 60, not 60K, that's Bitcoin's low there in February, the low in February to current price action, we're above the value area high of the range. Now you can see the back test of the value area high is going to be in super perfect confluence with your pitchfork, right? So if we chop in here for a bit, and then come down to backtest that, if it holds, you would expect continuation to the upside. And I would really be looking at these anchored VWAPs. Remember how powerful anchored VWAPs are, guys. One anchored VWAP's from the bear market lows. One anchored VWAP is from the all-time highs. That zone right there is going to be a major, major zone where we could see resistance coming in. This is your next, just based off the anchored VWAPs alone. I'm going to be watching for shorts here. But even within our, so one of the things we were looking at, let's say that this is a bearish scenario of an A, B, C dump. Within your C wave, that means from this low right here, within your C wave, you still need a 5-wave count. And we see a very clear wave 1, wave 2, 3. Now, if this pullback last weekend was a 4, then we were looking for a 5. And that's why, yes, last week and earlier this week, I was looking to short the SFP of last week's high because it could have been our wave 5. Let me zoom in here onto the 8-hour and we can talk about that. So you can see here, if this was from the start of our third wave, 1, 2, 3, 4, and we were looking for an SFP here in a 5. But here's what has changed since last week. If I can get this. All right. The move up is not an impulse. So you cannot look at 3-wave corrective move. So we cannot say that that's a wave 5 and then you're going to dump, right? What we now have to look at is you have a 1, 2, 3, and we're still in a 4th wave. So this has to now, looks like it's a high probability flat for a wave 4, and then you're going to come up in a wave 5 to take out the high. So knowing that, let's pull our flat targets because we have now some nice confluence. If we go from the lows to the highs here, and we look at just those flat targets, we'll look at where the flat is coming in at the back test of your pitchfork band of resistance, support, excuse me. Also, you have your value area high here. So now this is a longing opportunity. I will actually set an alert right around there. And we'll also set an alert on the 1.236 because I'm looking for essentially a WXY correction in here. Let's zoom into the 4 hour because what we're looking at is you have your initial 3-wave corrective move down, another 3-wave corrective move up. So we're looking for some sort of 3-wave corrective move down to take out that low. If you come to your value area high, you back test it, it holds, and this zone, right? If this zone holds, you look to take out the highs. So we could essentially be looking for a long on Ethereum, a very high probability long position. Let's just say from the value area high, let's say we put it below the bottom of the box to take out at the very minimum your highs. That's a 6-to-1 risk to reward ratio, but I would even leave this open, some of it open to come up there. And that would end either your C wave or your 3-wave, right? Your internal wave. This internal wave, 1, 2, 3, 4, 5. And if that's the C, then you expect to roll over strongly afterwards. If it's a 3, you would see a higher degree pullback before continuation. We don't have that data yet. We're going to have to wait until this lower degree wave 4 plays out and a lower degree wave 5 plays out. But Ethereum, very nice here. Okay, I'm going to look at Tau real quick. Guys, I just got it. Hold on, give me just a second here. Okay, I do have to get going soon here, but let me go to, what was it, Tau, USD. Okay, Tau rejected from our monthly level. We were looking for that potential 5-wave impulse from these lows. We SFP'd the range lows. Looks like we could have that contracting diagonal here. 1, 2, 3, 4, and then within the 5th wave. So within the 5th wave, this looks like 1, 2, 1, 2, because you have overlap there. Or it could be a contracting diagonal, but you would still need one more high. You would need one more high here. I think we covered this yesterday. So you would have to see, or we're either doing that or we're seeing a larger flat in here as well. But you can see your golden pocket at 206. You have an SFP of this low into the golden pocket. So that is a long that I would be interested in. Or the weekly above, looking at a short at the weekly above. The main level we were looking at is this 305 level, 302 to 305, or 300 to 305. Top of the pitchfork to the naked weekly and the daily. But you are in that exhaustion, that buying exhaustion channel here. So you've got to be very, very careful. Just like Bitcoin broke down from its, you kind of have this exhaustion channel forming right now that you could be about to break down from. Let's do this. So you can see you're back testing the bottom of your pitchfork and the bottom of the channel right now. If this breaks, I would expect to come down and sweep all the liquidity from the channel into 206. If it holds, I would expect to come up and at least hit the weekly level, or not at least, to at least take out this high. Because your final move could be an ending 1, 2, 3, 4. Actually, you can't say it's contracting anymore. It hit the bottom of the channel. It depends on how you pull the channel, because if you pull the channel from this low to this high, well, yeah, it still would hit the bottom of the channel. All I would be looking at on Tau is this buying exhaustion channel. If it breaks down, you're looking to come down to 206. If it holds here, you're looking to come up to break your local highs from earlier. So what we can actually do is look right now to see if we are seeing, we'll zoom in onto the 1 hour. Let's see, 1, 2, 1, 2, 3, 4, 5, 4. You could see some sort of, no, you can't. Sorry, that won't work. You do have some bull divs coming into this low, though, at the bottom of the channel and at your pitchfork. It's your 786. It's the bottom of your pitchfork, and it's the bottom of the channel. You might get a move up to VWAP right here. You did have some bull divs. You can see very slight, but from, well, actually maybe equal lows. Let me see if our 15-minute was giving us bull divs. No good bull divs here. So yeah, I'd be cautious looking for a long right now. Okay, heat map. Yeah, let's look at the heat map real quick. So we'll go for this week so far. We just took out some liquidity below those lows at 77.6, guys. That's the reason why we were looking. Remember, that's your flat target on Bitcoin. If we're looking at a flat in here, the objective of the flat was to take out these lows. We had liquidity below those lows. But if you're looking at, man, this is really hard to count impulsive, guys. So in an ABC, this needs to be an impulse in an A wave. This needs to be corrective in a B wave, and this needs to be impulsive in a C wave. I have a very, very hard time counting an impulse here. So because of that, the only other scenario for a flat is some sort of WXY, right? Your overall target is still the same, but you're just counting it as a different, more complex correction. It's tough because this does look like it could be an impulse. 1, 2, 3, 4, 5. And you don't want to see an impulse here. You want to see a 3-wave corrective move. So then now we can say, hey, maybe the flat is becoming less likely. And this was the end of a move. And we're seeing a wave 1, wave 2, and then a 3, or of ABC, right? We're going to see the start of the correction from here, not from here. You'd have to make one more low to confirm an impulse, because if you don't make one more low, then the WXY flat stays intact. And essentially you'd be looking at the 3-wave move like that. So we don't have the data for that yet. If we make a new low, then we're going to have to start the correction from here. Okay, guys, I know that let me look at Monero real quick. XMR. That's right. It was delisted on almost everything. Let's go to MEXC's chart. All right. Well, we have a very clear range that's developing in here, right? This is our range. Clearly, this is impulsive to the downside. So now we want to focus on mostly that range. Nice bounce from a golden pocket here. We never came down to this golden pocket. This is way old. This is way old. We did see that 3-wave corrective move, just like with Bitcoin. The overall 3-wave corrective move we rejected right from the 1-to-1. But you did not come down and make new lows. That is actually very concerning, meaning that we could be seeing this merging into a larger corrective move. Oh, and guess where you're hitting? Guys, I would be very, very careful with Monero right now. I mean, you could come up a bit higher to 516-ish. And if that's the case, let's see, you could count here a 1, 2, 3, 4, 5. That would be a contracting diagonal. There. You get some pullback here. And then you would be looking for another impulse, because a contracting diagonal is a motive wave. So this would be a wave 1, wave 2. All of this is a wave 3. Then you would be looking for a pullback in a 4 and a 5. Yeah, and the other scenario, look at, you're hitting directly into that 1.236. The other scenario is that this is not a contracting diagonal, but it is that 3-wave corrective range. And so you're looking at some sort of W here, an X here, and then another Y here. And you're wanting to reject essentially from this overall zone, but within the overall zone, this is the key area to reject from. So you are at resistance, and I would be careful. Now, money flow looks bullish AF on Market Cipher. Look at that money flow. You do have some slight bear divs here on the daily time frame. I would just be very cautious of this sucker ending around this zone. You can pull your volume profile for that zone. You're going to be above the value area high. Actually, nice little breakout, back test of the value area high, continuation to take out the range highs. And if we look at pulling our Fibonacci golden pocket of the impulse down, and we're going to put that on log scale because that's more than a 30% drop. Oh yeah, guys, we got to be very careful coming up here. So the two big zones are obviously the zone we're at right now, and then kind of this zone, a bigger zone here. But I know that's a big zone. You could even extend a new range that's all of this. You're attempting to break out of a pitchfork. This pitchfork has been pretty well respected. Rejection come above. Let me check the skiff to see if that looks better. Actually, it does. It does look a little bit better. So you're breaking out of a skiff pitchfork here, but you're breaking out into resistance. Now, if you fall back inside the pitchfork, you're in trouble. You are at a zone to reject. I would just be careful on Monero. The big thing with Monero is, could this be, it's very hard to count. You do have that contracting diagonal probability in here. So you could be looking at a 1, 2, 3, and that would continue up much higher. But I would be very cautious of that. I mean, you're looking like you're at these two zones where you could reject. Money flow looks good, but you have to be careful with this. And you are creating quite a strong parabolic liquidity trail that if you start to lose that, so really is for the bulls, you want to maintain bullish market structure, because if you start to break this, you could break it quickly. I mean, not a lot of bear divs though, and money flow looks super good on Market Cipher. What did I just do? Yeah, it's interesting, guys. Money flow is coming up. It's crossing into the green on NAMI, and it's still rising on Market Cipher. The big thing I would watch out for is kind of that distribution. Tap 1 here, tap 2 here, and then this area here, you're looking for a tap 3, and then you would look to flush this down. Now, in a more bullish scenario, you could get a model 1 distribution where you have a tap 1, a tap 2, and then a higher tap 3. So you would look for an impulse here, a 1, 2, 3, 4, 5. Money flow does suggest that could happen. But okay, guys, I do have to get going. Missed another phone call here. Remember, if you want to join the Telegram, join, register for BYDFI, minimum deposit of $100 or more. Once you've done that, click the Telegram link in the Telegram channel, type in /verify in your user ID. That'll get you in. Let me check out real quick Bitcoin. What is Biddy doing? Yeah, we're just consolidating, guys. We're going into the weekend. Now, remember, that 76.6K support level. Watch for an SFP of that, because that's also where your value area low of your range is. If you look at this range since last Friday, actually, it's raised up a little bit. Let me just do this. No, it's on the 1 hour. I like using that 1 hour chart, but you can see the value area low of the range is going to be just below us. We did front run it. I know it looks like we hit it, but we did front run it very slightly. And then you have your target down there. You have your 786 Fibonacci down there that hasn't been hit at 76,809. And then you have your liquidity at 76.6. So if we can SFP the low from earlier today, you might be able to get a nice move up. I'll try to keep you guys updated in the Telegram on that. But I do got to get going here, and I hope you guys have a good weekend. You trade safe out there, and I will see you guys next week. Good morning, Tony. And yeah, guys, have a good weekend. Trade safe. Make sure to hit the like button on your way out. We're 2 likes away from 100 likes. Can we get there? Please hit the like button if you haven't, guys. Let's try to get to 100. I appreciate you so much.